All right, sit down, tune in, turn on. We just have about 30 seconds before we're off and rolling, getting a little bit of technology up and running here. But do let us know that you hear us all right. And that, again, you should be able to see my screen. Ultima trades back here in just a few moments. All right, just making sure we are up and running. Everything looks good. So please sit back and kind of enjoy the next hour, hour and a half. I just wanted to make sure that everybody was tuned in, turned on. You should be able to see me as well. I was having a tough time getting the camera up and rolling. We are good to go. So all right, everything looks good, sounds good. By the way, please feel free to chat in. Let us know that you not only hear us all right, you see us all right, where you might be joining us from today. Markets are rather volatile, so if you see me looking off to screens off to the side over here, because it's because I'm actually watching some of the markets. I'm also, people always ask this question. I'll start a little informally here. Is this live? It is live right now. S&Ps are down some 1250. And here we are, February 23rd. Again, this happens to be the Thinkorswim platform, but I will also bring up Tastyworks pretty extensively throughout the course of today's presentation. We should run just about 90 minutes or so. Somebody was asking that question as well. We run a little over. Fantastic. Oh, cool. Everybody's kind of chiming in. Chicago. I hear it's really nice there this time of year. Poughkeepsie, even colder. I actually learned how to ski in Poughkeepsie. That's New York, for those of you that are not from that particular area. Anyway, with that, welcome everybody. As I said, I started a little bit informally. A couple things that I would like to let you know right up front here. And can you ask questions throughout the course of today's session? The answer is absolutely, unequivocally yes. In fact, I am looking over at my other monitor here, and of course, I can see all of the questions actually populating in there. Any commentary? It's fantastic. I am broadcasting today from none other than Payson, Arizona. So this is kind of normally this is like a summer home, but we happen to be here right now just for a few months in the winter. We no longer reside in Arizona. We live in St. Croix in the U.S. Virgin Islands. There was somebody actually that chatted in. They were from the Virgin Islands in here as well. People always ask, why the Virgin Islands? I don't know. Why not? Live on a beach. It's not half bad. The kids rather enjoy it as well. But from Payson, Arizona, we're having quite the little blizzard outside presently. By the way, I'm done with winter. This is it for me. I'm over and done with after this. So ask questions throughout the course of it. Fantastic. I will absolutely respond to them. If I don't get to your questions in the beginning of the presentation, I'll hit them towards the end. There's no problem there whatsoever. With that, let's actually jump into it. Looks like everybody's good. A couple of you guys have actually chatted in, so I do appreciate it. And yeah, so we're going to learn a little bit about, of course, about Ultima Trades, which is a high probability income generator. My name is Don Kaufman, and you are watching a Theo Trade presentation. A risk disclosure, we're not financial advisors nor a broker dealer. I always throw this in here because I did spend a pretty significant amount of my career inside of the brokerage side of the business. We'll discuss that. Let's get right down to business. This is why you're here, okay? Whenever I talk about this is why you're here, first and foremost, whether you have dramatic amounts of experience in the marketplace, you're a complete newbie, I've geared this presentation, okay, to rather both extremes. And I'll explain that as we go along here a little bit today. But for those of you that are brand new, look to grasp big, broad strokes of logic. For those of you that are a little bit more into the extremes, look for the finite, what we term criteria. Criteria is the specifics, if you will, behind some of the trade ideas that I'll be discussing today. And I will discuss quite a number of trade ideas throughout the course of today, especially today, because it is volatile. So first and foremost, you're going to discover why Ultima trades are just ideal. Ideal is even like a word that's not strong enough for the current environment. I mean, this is where you want to be in this current market environment. It is volatile over there, and this is going to help you generate potential monthly income. Number two, you're going to learn a couple of trading symbols right off the bat here that professionals use on a daily basis to be able to build, to create Ultima trades. You're also going to learn a little bit about where edge lies specifically for retail. Okay. And whenever I mention like retail, that's me, that's you, like no longer making markets. I'm not working obviously at Thinkorswim or TD Ameritrade anymore. And again, I'll discuss my background here momentarily, but we're going to discuss, okay, predominantly today, okay, what works best on the retail side of this business. Like you're sitting at home all by your lonesome with, your iPad or, your little Pentium computer. It's been a while since we've had Pentiums, but you get the point. You're going to learn though what works for retail traders. And that's really where I'm going to focus substantially on. You're going to learn how to reap the benefits of high probability trades while learning, okay, little known secrets to mitigate downside exposure. Mitigation of risk is critical, especially in what we're going to be discussing in today's volatile marketplace. And of course, we're going to discuss what products make the most viable candidates and what products are going to be a recipe for disaster. And when I mentioned the terminology of product, what does that mean? Okay, it could be Apple, could be Tesla, stock symbols could be spiders, and we're going to discuss that in extent. All right, for those of you that are tuned in today, we will provide to you right at the end of this webcast. So stay with me literally right to the end of the webcast. We're going to give you the auto expected move indicator. There's an indicator that I just use this indicator incessantly. In almost every conversation that I have regarding markets, I talk about expected move. It's literally an indicator that's kind of changed the way that we view markets. And we feel that everybody should have ultimately this indicator on your screens consistently. So we're going to provide you a link specifically to this particular indicator. Stay with me right to the end of the webcast. We could easily sell this for $500, but again, we want everyone to have it. The other thing is it's a little bit of a loss leader. Like when I talk about like an indicator, listen, I'm going to bring it up. I'm going to be bringing it up today. I mean, I bring up the SPX here, the mother of all products, the SPX. Those little lines on your screen, if you take a look at those little lines on the screen, what do they represent? This is what the marketplace is anticipating. Again, anticipating movement to be. And when I say anticipating movement to be, this is not my numbers. These are not my levels, right? This is the option market. Okay, this is the option market depicting forward risk. So if you see those two lines where I drew the X's, okay, that's where the option market, all right, is giving you an incredibly high probability of trading in this range within this week. And by the way, this is called expected move. The expected move this week is plus or minus $121 in the S&Ps. And I'd stop right there and I say that, do you think that information is useful? Okay, and you're like, how can I use that? You can use it for risk management. You could use that to basically guide some of your trades. Like if we're at the lower edge of the expected move, you might want to get a little bullish and vice versa. Okay. You can use this time and again, and you can apply expected move. Again, you can apply expected move to any number of underlyings. Like for instance, here's Tesla. You know what's interesting about Tesla? It's actually cracking out of the lower edge of the expected move. It's only Wednesday. It's already cracking outside. It's only a 4-day trading week. Nevertheless, okay, this is incredibly viable indicator that we use, again, consistently. It's our gift to you. Stay with me right until the end of this webcast. All right, onward and upward. A few housekeeping items. Housekeeping. This is skill set. I'm actually going to move at a pretty good clip today. Sit back, pay attention, close up Facebook, get rid of Skype, phones on silent mode. Definitely kick out the kids. The dog can stay. Listen, you took the time to be here. And again, this is a skill set. We're going to focus on a lot I'm going to jump into some live trading opportunities here almost right off the bat. I'm going to make this a considerable amount specifically today about live markets. Now, this is a presentation when we talk about Ultima trades that I've done quite a number of times. Every single time you come here, okay, this is going to be dramatically different. It's one of the reasons I like to host, these webcasts during live market environment. I don't do this stuff on a Sunday night. I don't do this stuff in the afternoon anymore. We do this during the market, because we want to be able to execute a few trades right along with you. So I took time to be here. This is important. Focus on being here. Here's a little bit about me, and I'm going to give you the nickel tour here. So I watched order flow for 15 years. And that is in large part what kind of brought me here. It brings up a very unique skill set, that I was afforded the ability to be given. And that's, when I say I watched order flow, I'll explain the order flow portion in a moment. But people constantly ask me how I got involved in this business. I grew up around the business. It's probably very unique from many people that are involved in markets. I actually grew up around the business. In the 1970s, I had family members that actually traded in Chicago. They started a trading firm. It was called O'Connor and Associates. It was actually hailed as one of the greatest trading firms of all time. They sold it to the Swiss bank it was a multi-billion-dollar deal in 1992. And again, from the earliest days of having Thanksgiving dinner with extended family, people would always talk about trading. I was right out of school, 3 weeks out of college at the ripe old age of 22, and I was invited to trade in Chicago, which I took them up on the offer. About 2 years after my trading career started, I knew a couple of traders from the OEX pit, and they said, we're leaving the trading floor and we're starting a brokerage firm. It's called Think or Swim. And I'm like laughing hysterically. I'm like, think or swim, think or swim. And I left with them. And I started there roughly in 2001. And I went on to actually build the education division of Thinkorswim. I was in the executive team when we took the company public in 2007. I then went on to actually run education from none other than TD Ameritrade as they acquired us in 2009. They scooped us dirt cheap during the financial crisis. And people always ask, what kind of got me here? When TD Ameritrade purchased Thinkorswim, I was in a 5-year lockup clause. So I spent pretty much 5 years planning my exit. But the time at Thinkorswim and TD Ameritrade, again, building education for, at the time, was 7 million retail clients when I was at TD Ameritrade. We studied everything that you did. Everything you did. If you tell me a specific strategy, I can tell you, like, hey, how did clients fare, for instance, selling covered calls? If you've done iron condors, I could tell you unequivocally, we would actually study mass data sets, just big data sets. We had an entire division of TD Ameritrade that would do nothing more. And you could ask them questions, say, hey, first of all, isolate everybody that trades options, and isolate everybody that trades stocks, everybody that trades futures contracts. I want to know, how many are there of those that trade options? How many have done iron condors? What's the success rate of an iron condor? You can go through and break this down, and you can actually start to whittle it down and even look at finite data, and specifically what works. Not for market makers. What I did on the trading floor was a very different business than what I do on the retail side. And I make no two ways about this. Like companies like Citadel, they're in a completely different business. Citadel is a market making firm. They're in a completely different business than you or I. And here we're going to talk about specifically today what works best for retail traders. And that comes directly from the experience, that we gained both at Thinkorswim and TD Ameritrade. When I say we, Theo Trade is not like a one-trick pony. It's not just myself, Don Kaufman. We have 7 other full-time instructors, many of which that actually came from that education division of both Thinkorswim and TD Ameritrade over the years. Lastly, if you ever need to get a hold of me after today, please, no problem, shoot an email. We use a common inbox. support@theotrade.com. Just support@theotrade.com. Just put Don Kaufman in the subject. It will go directly to me. So by all means, if you have questions in that one, it's again, more than happy to answer those. So I do a couple of TV appearances. This is actually the last time I was in Chicago. Kind of crazy. It was 2019. Actually, I just did. This is TD Ameritrade TV. I just did quick TD Ameritrade TV performance just about 30 minutes ago. This is CNBC. I do it less often these days because they tell you what stocks to talk about, which I absolutely despise. So if you ever watch CNBC and it looks like the people on there have no idea what they're talking about, it's because they're assigned specific stocks to talk about. Don't tell anybody that one. Let's get down to business. What are Ultima trades? So what are Ultima trades? The first thing I always like to mention, higher volatility. Higher volatility, pretty much since the onset, okay, of the pandemic, which is March of 2020, okay, it's resulted in significantly more volatility. Significantly more volatility translates to higher options premium, right? Now, options premium, I did say option. I said the O word, right? Don't panic on me just yet. All I want you to understand is that, and by the way, when we talk about like volatility, let's actually pull up a real chart over here. We'll cruise over to VIX work. VIX, the S&P 500 volatility index. Let's pull up like a 3-year on VIX. Okay, when I'm talking about higher volatility, here, you know what? Let's even pull up a 5-year. It's a 5-year chart. Yay! Here's volatility pretty much since the onset of the pandemic. Okay, it's just considerably higher. Now, VIX is kind of like, if you will, my predecessor's volatility indicator. We look a lot less at VIX. VIX has been overdone. I don't know. Anybody here look at the VIX? Come on, anybody? Does anybody here look at VIX? It's a fair question. If you do, yes, no, why for yes, and for no. It's an interactive bunch, right? So if you look at VIX, you got to understand VIX, it's looking at 30-day risk. It's not like necessarily the here and now. There's a lot of other things that you should consider. And I'm actually going to cover exactly those. So options implied volatility skew is also at historically high levels. And the volatility remains at record highs, which is Ultima. So there's a few other symbols that we're going to talk about here. And this is stuff where I say, like write this down. How many people here look at the VVIX? Okay, VVIX, the volatility index. Okay, the volatility index, sky high, and it has been since the onset. So when people, they always argue about, oh, this is doing this and this is doing this. Okay, there's actually some depth you can look at in volatility, and that's actually what we're going to discuss because there is phenomenal amounts of edge. Okay, in this marketplace, if you know where to look. There's another symbol I'm going to bring up here momentarily. It's called skew. Skew, and if I bring up the whole history of skew, is at historically high levels as well. Okay, so again, all of these factors have actually come together, right, to make what is Ultima trades. And if you're kind of curious about Ultima, like when we talk about Ultima, people always ask and they go, does that mean ultimate? I'm like, absolutely not. Okay. And I actually do not like when people say it's the ultimate trade. Okay. Can't stand that. Ultimate has nothing to do with that. In the marketplace, we have higher volatility. Okay. So we look at the volatility. The volatility is the VVIX, but there's also the volatility, which is actually Ultima. And one of the reasons that the trades that we're going to be discussing specifically today, okay, has to do with record Ultima. It's record-breaking Ultima. And again, it's a little confusing, but it's the volatility, which will be coming to light here in a few moments. Most people, again, they don't look at something called Ultima, but nevertheless, it's actually what is producing right now in terms of, creating potential monthly returns. All right, skewness. Markets right now, all I want you to understand are just highly skewed. Okay, things are not, if you will, a normal distribution curve. We're seeing dramatic amounts of skew. You can actually look at skew under a symbol SKEW. So here's one of the other things where I always say, like, people, they're not even familiar with what skew is. Skew is a distortion, if you will, in how option markets are priced. And I'm going to make a quick argument here. Even if those of you are like tuned in right now and you say, I don't even trade options, I want nothing to do with options, like I get it. I get it. I'm not here to be like, you need to do this. We are going to talk about options here. Okay. But the point being is, if you don't understand the implications of skew, you don't understand Apple anymore. Okay, you don't understand the S&Ps. I don't want to hear about MACDs and Fibonacci's and Bollinger Bands. You got to understand what skew ultimately is telling you about forward risk. And skew has been record breaking, just record breaking. And there is edge in understanding this. Okay, so we'll discuss that a little bit as we go along here. Now, how can we use skew? It sounds like really cool, but how can we use skew to our advantage? Skew provides a very definitive edge in the sale of out of the money options. And again, I said options, all right, a couple of times. Everybody calm down. They get very hyper about options. We are going to discuss, again, a bit about options. So many traders are currently buying options. And in effect, okay, that's tweaking the pricing to be beneficial for premium sellers. So this is something, and I'll run through this in just a moment, but if you think about since the onset of the pandemic, I'll ask the generalized question here, okay? Did a lot of people start trading pretty much in March and April of 2020? Just think about that for a second, okay? Because you've actually heard all the statistics, you've heard the news, but I question this. Did a lot of people start trading for the very first time, like really become much more active in March and April of 2020? If you look at the statistics, they actually had more accounts open at Robinhood in 1 month than they had opened, okay, since they had been literally in business, which is insane. So you had, okay, unbelievable number of accounts that opened. And by the way, I'm not here to pick on Robinhood or any of the other brokerage firms or TD Ameritrade. Again, I was Thinkorswim, TD Ameritrade. One of my very closest friends now runs brokerage ops at Robinhood. One of my other friends runs Charles Schwab. He's one below the CEO of Charles Schwab. Another very close friend runs E-Trade. Like basically, it was the people that ran Thinkorswim, okay, diverged and now run all the major brokerage firms pretty much in the U.S. Pretty interesting, way things I think kind of transpired. The one thing that's unequivocal though is when you opened up a brokerage account or somebody opened up a brokerage account for the very first time, those accounts, okay, limited you to what you could do if you trade options. Most of the accounts said you can only buy options. You only open the account with $5,000, or even if you open an account with 50 grand initially, they said, yes, we've given you the ability to trade options. What ability do you have? You can buy options. They go, wait, why? Okay, they're limiting you. They're like almost like, handicapping people as to what they can do. You're allowed in the marketplace, you can only be a buyer of options. There are so many people that opened up accounts in 2020 that are trading actively that it started distorting option pricing, making option pricing that much more beneficial for premium sellers. By the way, this is just a couple of days ago, we traded 54 million contracts. I just had to throw this one up here. We traded 54 million contracts. I left this February 11th date. That's above the average. Yesterday we traded 41 million option contracts, but take a look. The year-to-date average. This is, by the way, this is an OCC report. What's an OCC? Option Clearing Corp. This is the 2022 year-to-date average. We're trading almost 44 million option contracts now a day. Just to give you an idea, when I was in the brokerage side of the business, and that's the last reports that I saw from the business was 2015. Again, I'm now, a few years removed, obviously, from the brokerage world, but we were doing about 15, maybe 17 million contracts a day back in 2015. This number has almost doubled since the onset of the pandemic, meaning that the amount of contracts that traded almost doubled. And it's wholly because of retail traders gone wild. I mean, people, you guys trade. All right, onward and upward. This is what we're going to talk about right now, learning to sell options. Many of you have heard through the grapevine that selling options is the way to make money, okay? How many people, though, have heard that? And again, like to make, I don't like to make these rhetorical questions. Like this is a session. We have, hundreds and hundreds of people on. We're broadcasting into Zoom. We're broadcasting into YouTube. There's a lot of people on right now. So how many people here have heard that? I'm not necessarily touting that you've done it, but how many people have heard that selling options? Okay. It's interesting to get to this. I would say it's interesting to get to this. What's interesting about it is that a lot of people hear almost, again, it's like through the grapevine, like you should sell options, sell options, sell options. And some people like dabble in it. And the moment they dabble in it, okay, it's like they get their hand slapped really hard. And you find out real quick, if you've experimented, full well, that risk can snap you in half in an instant. So what I'm going to do today is I'm going to separate myth from real risk, okay? Fact from fiction. We're going to discuss selling options. And again, why right now selling options is so effective, but more importantly, okay, like I can sit here and dance around this all day. Like, you sell options, you're going to sell options. You have to know what options to sell. You have to know where to sell those options. What products do I want to sell those options in? You have to know, okay, the nuances, what we term criteria. Okay, what's criteria? It's the specifics. It's the nut and bolts behind, like, it doesn't matter when somebody says, oh, you should sell options. Who cares if they say you should sell options? You got to know exactly what options to sell, how far out to go in time, right? Some of you have absolutely unequivocally no options experience. Well, guess what? Do not panic. You can do this. Maybe you know nothing about options, and that's okay for today's session. And again, as I reiterated, if you're an experienced trader, okay, bear with me as I go through some of the basics, because I'm going to tell you right now, even the most experienced of you, you're actually going to pick up a tremendous amount. If you're a brand new, complete and total newbie to this, look to grasp big, broad strokes, concepts, probability, risk, right? Don't worry about the finite criteria. This is a presentation where I legitimately will tell you, you could watch this 3, maybe 5 times. And every single time you listen to this, you're going to pick up some other nuance. I mean, I have packed, okay, the next hour plus with a huge amount of education in it. Okay. One other critical aspect, and it's a big news flash, premium selling can be done in small accounts. Okay. Now, you're going to hear me say this just constantly throughout today's presentation, because everybody comes in here and go, I need a lot of money. Oh, cool. Somebody actually just came in here and said, don't you need a lot of money in your account? The answer is no. They changed the rules. They changed the margin requirement, and they changed products on you. $2,000, $2,000. Okay. In a funded brokerage account, you can do anything you want. And you can actually do it very effectively in today's marketplace. So I do not want to hear, what about margin? What about it? Okay. I'll do it all day long. By the way, did you know you could sell options inside of your IRA? This is an IRA. That's my margin requirement in an IRA, which is $9,000. By the way, that's I'm actually producing quite a lot of option decay for $9,000 in here. Right? So put on your big boy pants. You're going to learn something here. By the way, other aspect in today's session, okay? I am completely no holds barred. I show you everything. When I say I show you everything, I don't care. You want to look at accounts? We'll look at accounts. How much capital I have at risk? Okay, at any given point in time, we'll show you that. We show you all the portfolios, every trade I have on, every nuance of what I do in this business. It's complete and utter full disclosure. Listen, the markets are flat today, not really making any money, not really losing any money. Hope that's okay with you, because this is reality of trade. When I say it's no holds barred, okay, I'll show you everything, including execution in a multitude of different brokerage accounts. I'm running presently about $1.2 million in an active position. That's not for everybody, but at the same time, you got to eat. Let's get into this. Let's dive right in. Again, there's many facets of selling options premium. All right. Whenever somebody says you're going to sell options, they call it selling premium. Some people kind of call it selling juice, right? Okay. Squeezing the juice out of the marketplace. Anybody ever heard that before? So if you hear these terminology, selling premium, credit spreads, short call spreads, short put spreads, delta neutral. You've heard like, I got a bear call spread on, I've got a bull put spread on. Can't stand those terms, but delta neutral trading, selling naked, all of those constitute selling premium. They're all facets of selling premium. Selling premium can be bullish, it could be bearish, okay? But predominantly and specifically for today, we're actually going to discuss a lot of market neutral. So what does market neutral mean? I'm less inclined, if you will, today to discuss market direction. Is that okay with everybody? So you're not going to see a lot of MACDs, a lot of Fibonacci's, a lot of Bollinger Bands brought up in here because quite frankly, there's no place for that in today's session. Today's session is much more exclusively about how can we worry less about direction, more about volatility, and how can we create trades specific to, well, volatility. Let's get to probability and profitability. You're trading, okay? No matter what you do, it doesn't have to be options, stocks, options, futures, cryptocurrency, okay? I don't ever want to be pigeonholed as a trader. As a trader, do I understand options? Yes, I grew up in the options business, okay? I will trade anything that is what we term fair and two-sided. If you can buy it and you can sell it, I'll trade it. And products are all based on probability. We can create trades all day long, just literally all day long, with a 90% probability of success. Excuse me, but you can still lose money on that one. I'm all choked up about it. Think about that. So I get emails every single day. By the way, this statement right here, you and I can create trades all day long with a 90% probability of success and still lose money. That statement is derived from one aspect and one aspect only. That statement comes from the fact I get 3 or 4 emails a day. We get hundreds of emails every single day at TheoTrade. We have just over 6,000 active clientele. We get hundreds and hundreds of emails a day. And I still, every single day, I got a handful of emails that say how often you're right in this business. And I give the exact same answer. Listen, lady, you can be right, 90% of the time. It doesn't mean you're going to make money. So if you think that, somebody's like, they're more accurate because they use a Fibonacci, it's a Bollinger Band, it's a MACD. Well, I got news for you. My division of Thinkorswim, we built the Thinkorswim charts. In fact, we even employ right here at TheoTrade, we employ the infamous Jeff Bierman. He's a professor of finance also at DePaul University in Chicago. Jeff Bierman actually built most of the studies on the Thinkorswim platform. And I mention this because Jeff always talks about accuracy with technical analysis, but then actually delivers the fact that you can be right 90% of the time and still lose money. Remember that probability alone does not make you profitable. You've got to remember that. It's critically important. Markets are always a trade-off, okay? Higher probability, higher risk, okay? You could be right 90% of the time, then you can still lose money. So where can you find edge? And that's exactly what we're going to discuss. Okay, that's what people come here for, is to discuss where you can find edge. Good, because what I'm about to show you is going to be of critical importance. We're going to start with the absolute basics and work a little bit into the extreme. This is where I say the next just few minutes, if you're experienced in trading options, hang with me. If you're brand new, never had experience, who here has never had experience? Just a yes for, never had experience. Yes, maybe. Okay, maybe never. Nobody ever wants to answer. If you've never had experience in the option side of things, you're going to get some brief experience right now. I love this in the main chat. Only one person, so everybody else knows what they're doing. Well, this is where I'm going to shock some of you right now. We're getting the drawing pen ready. So we're going to go out into the marketplace and we're going to build a trade. Okay, the very first trade I'm going to do, all right, the one thing I want to bring up, this is a stock. I don't care what the stock happens to be. I really don't. Like, the stock is inconsequential. Like, when you're trading, okay, trading is different than investing. I'm not going to teach you here to be Kathy Wood, right? By the way, you should be thanking me for that right now. The only thing falling faster than this market is Kathy Wood career. I couldn't let that one go. I apologize. We look at this business as traders as there's symbols on a screen. Do you really think I care when I actually have a position on Apple about Apple? Oh, the next iPhone release is coming over here. It doesn't, that doesn't affect me in any way, shape, or form. We're volatility traders. Volatility traders look at this business very differently. It's a $50 stock. What's its volatility? That's the right question. So I always ask that you just understand that this isn't a stock, it's stock. Okay. Now, here is a $50 stock that I call stock. Now, stock trades at 50 bucks. It's a volatile instrument. Let's say it's a heavy volatility. Do we own the stock? No. Do we want to own the stock? No. Why don't we own the stock? Because we don't want to own the stock because it's going to tie up 50 bucks. The other problem with 50 bucks is I don't even care about how much capital you have in an account. I really don't. This is going to work from $2,000 to up to $2 million. I don't really, care and beyond. The reality of a $50 stock is it's not about how much capital to me that it's tying up. It's about that capital then is put at risk, because a $50 stock, as you well know, right in this marketplace right now, becomes a $40 stock like that. I used to use an example here of a $50 stock. The stock was actually called Twitter. I'll bring up Twitter in a second. I think it's a $32 stock right now off the top of my head. Let's go out here and let us sell, okay, a 60 call. And that 60 call is going to bring in a $1 credit. And I'm going to bring this down here. We're going to sell, okay, a 60 call. Oh, and we're going to bring in a $1 credit. That's a 6, I swear. Now, time out. There's some of you that have never traded an option before. You go, I don't even know what a 60 call happens to be. Okay. First of all, options are always good for a period of time. In this case, we're going to make this option good for, let's say, 2 months. 2 months, 2 months, 2 months. Okay. What is a 60 call? Let's talk about both sides of the 60 call. In options trading, bear with me here for a second. I'm all choked up about this, right? We need some caffeine. All right, better. got the caffeine down. In options trading, you could be both a buyer or a seller, okay? When I say a buyer or a seller, effectively what I'm saying is when you trade options, you can be in either side of the market. It's not dissimilar to stock. The $50 stock, what can you do with a $50 stock? You could buy or you could sell it. And you go, but I never owned it. Well, you don't ever have to own the stock. You could just sell the stock short, right? By the way, a lot of people don't know this. Did you know that they changed the rules in an IRA? In a retirement account, you can actually create now short positions. And you go, what? Yeah, most of the brokerage firms haven't actually changed their regulations, but the IRS regulations clearly state, yeah, you can do pretty much whatever you want. All right. So with this, we're going to look at a call, a 60 call. Forget about buying it or selling it for right now, because we're going to talk about both sides of it. Let's talk about buying the 60 call. When I say forget about buying or selling it, I want you to understand from both sides of the equation. If you buy a 60 call, what does a 60 call give the right to do? Now, you know what? Buyers and sellers. Buyers have rights. Sellers have obligations. A buyer of a 60 call has the right to buy the stock at 60. Well, let's say you went out and did that. You went out and buy the 60 call. If you buy the 60 call, what's the stock? The stock is stock, right? You buy the 60 call. You think that that stock is going to where? Well, beyond 60. 60 is not even going to do it because you need the stock at 60 plus the dollar, right? 60 plus the dollar. You go, what? Yeah, you need a big boy move, don't you? So you don't need the stock at 60. You need the stock at 61 just to be able to break even. But let's elaborate upon, again, excuse me, what does the 60 call enable you to do? It enables you to be able to buy the stock at 60. Why would you want to buy the stock at 60? Listen, if you just went out there, you don't own the stock, you had nothing to do with the stock, you don't even want anything to do with the stock because it equals risk. You go out and you buy a 60 call. You're buying the 60 call because you are absolutely unequivocally bullish. You believe that that market is going to rock to the upside and rock to the upside huge. So what do? You buy the 60 call, and then you get down on your hands and knees and pray to the option gods, please let the stock go to 70. And the stock could go to 70. If the stock goes from 50 and jumps to 70, what's the 60 call going to be worth? By the way, not rhetorical questions again. What's the 60 call worth minimum with the stock trading at 70? Right? It's going to be worth at least $10 because you have the right to buy the stock at 60. Everybody else in the world has to pay 70 for it. So what's the 60 call worth with the stock trading at 70? It's got to be worth at least $10, right? At least $10. So I think that's important. And then you go, no, I didn't ask you what you made. I said, what's it worth? Okay. When I say what's it worth, okay, well, it's worth $10, of which you paid $1 up front. So you're going to make about 9. But what's the probability? Think about this. What's the probability of the stock going from 50 and jumping all the way to 70? Probably not going to happen. That's an absolutely massive move. If it does happen, it's probably some type of a takeover like that, but it can happen, but it's a low probability of a stock going from 50 and jumping all the way to 70. Depends on the stock. Okay. I've actually, I've had crazy things like that occur though. And that's fine. So you have the right to buy the stock at 60. Everybody else has to pay 70. One thing you need to know about options. Okay. Most people that trade options have no intention of ever buying the stock at 60 to sell it at 70. Most people that buy the option just turn around and do what? Sell the option. So when the stock is trading at 70, instead of buying the stock at 60 and delivering them the stock at, somebody else's stock at 70 or getting rid of the stock at 70, you don't have to do that. All you have to do is just basically buy a 60 call. If the stock rocks up to 70, you get rid of it, and boom, you're out of the trade. You make, what, $10 minus $1 you paid for the initial call, and you're out of the trade. We're not going to do that. We're going to look at the dark side of the force. What's the dark side of the force? Buyers have rights. Sellers have what? Obligations. Now, do we own the stock? No. Do we want to own the stock? No. Is this a covered call? Absolutely not. What we're going to do in this first example, and again, we're going to elaborate more upon this, but we're going to do in this first example, we're just going to sell a 60 call. We're going to sell the 60 call, and we're going to sell it what? What we term naked. You go, what? We're going to sell the 60 call. We are going to sell it naked. You go, I can't do that. You can do that. I don't have the margin. You do have the margin. You just don't know that you can do this. You don't know that you have the margin capability. That's always the battle here is people go, but I can't, change all the rules, change how the margin works. You can sell a 60 call. So if you sell a 60 call now obligates you to do what? To give somebody stock at 60. You go, but Don, I don't have any stock. Well, let's think about the probability in this trade. What's the probability in this trade? That's what I want you to focus on in this first example. I don't really care what you think about selling a 60 call. Like, I don't care. It doesn't matter what stock it is. I want you to understand from a probability point of view. Okay. When you sell a 60 call, you've now sold yourself into an obligation. You're obligated to give somebody your stock at 60. You go, but I don't own any stock. Well, that's okay. Because you know what? What can this stock do? The stock can stay flat at 50. If the stock stays flat at 50 for the next 2 months, what would you make? $1. If the stock goes anywhere down, what would you make? $1. If the stock goes up, even gets to 55, what would you make? $1. If the stock goes all the way to 60, what would happen to you? You go, I wet myself. Yes, but you would still make $1. Okay. Where do you start losing money? Well, you start losing money not above 60, but you need 60 plus the dollar credit. So really you start losing money at about 61. What's the probability of getting up there? Small. Now, I'm not trying to handicap you and say, well, exactly what the probability is. The probability of getting, okay, not just to 60, but north of 60 is small. It's a rather small probability. But let's get crazy. What happens if the stock goes from 50, jumps to 70? You go, oh, I'm in trouble. I'm in trouble because what? All right, stock goes to 70. You have to give somebody stock at 60. You go, but I don't have any stock. That's right. You're going to have to buy the stock at 70 to give them stock at 60. What are you going to lose? You're going to lose $10 minus, of course, the dollar you collected. Are we comfortable with this? Okay. I think it's critical to understand not only the good portions of this. Obviously, there's an incredibly high probability of keeping the dollar. But you got to understand the dark side. If the stock goes from 50 and jumps to 70, there's a lot going on in here. Let's do this again. Let's do it again in another example. Okay. But before I go to the other example, let's bring up live trading. live trading. You know what? I was poking fun. I was poking fun earlier at Twitter. Twitter used to always be my go-to example because it was exactly a $50 stock for a long period of time. Well, it wasn't that long. It was a long time ago. It was a $50 stock, I swear. See, it was a $50 stock. Okay, it was migrating around 50. Now it's migrating lower. Okay. All right. Let's go, 2, 3 months out in time. And just to make a quick example here, you can actually come over here to options, theoreticals, and Greeks and go probability OTM. Probability OTM designates probability out of the money. I can sell an option right over here. Like here's a 39 call. It's trading for, 50, 60 cents, but that has like an 85 or 90% probability. So immediately what I want you to be able to discern, okay, is that price and probability are one and the same. If you want to create a 90% probability, I can peg 90% probability in seconds. Like even if I go 3 months out here, look at this. 3 months out, you want a 90% chance, of making money. There it is. It's 44 calls. That's why I say probability alone does not constitute that you're going to be profitable. Okay. Now everybody can go out and they could sell, for instance, the 44 call against a stock that's trading 33. You realize for the stock to go from 33 above 44, oh, that is a big boy move. It's a big boy move, especially in a stock like that. Stock would have to get back to almost 45 if you really start losing money. Possible? Is it possible? Of course it's possible. Anything in this business is possible, and that's why you keep open-minded. But that's the first example. We ready to move on? Everybody understand just the very simple context of what a 60 call happens to be, okay? Because what we're going to bridge our way into now is that when you sell options, okay, options decay, all right? Every day that passes when you sell options sees the dwindling of options premium. It's like literally option premium melts away as time passes. You see the options, okay, that you sold decay exponentially. So let's take a minute to just review time decay. Everyone here that has ever traded an option has seen this decay graph, right? Is this true? Okay, those of you that have traded, have you seen this decay graph before? Okay. These are real questions, okay? They're real. What most people do not understand about this particular decay graph, and everybody has seen it, is the decay graph represents what we term near the money options. What near the money options is, okay, I'm gonna give you a quick sketch of this one because this is something I never talk about, even in this presentation. What near money basically means, if you look at a distribution curve, here's a stock and the stock's trading at 50. Near money means the options you're discussing are trading very close to the $50 price of the stock. The options are not out here at the 60 level. They're not out here at the 70 level. Does that make sense to you? That this decay graph is actually completely false if you're looking at what we term way out of the money options. That's good. That's going to come up later. It's going to be on the test. There's no test. I'm just kidding. But there should be. Okay. Everybody that's ever bought an option has fought one of these decay graphs. And I'll just give you a quick example. It's like one of my favorite things to do. This is a decay graph. You go out there, okay, and you buy a 100 call, and let's say you pay $3 for it, and this thing has exactly 1 month remaining to expiration. How many people have done this one? Okay, so when you do this, you go out and buy an option for about $3, and you have 1 month, okay, remaining until the expiration. So this 100 call gives you the right to buy the stock at 100. Okay, you put the trade on, you paid $3 for it. Okay, you're starting to burn your month. A week goes by, and the option starts to drop in price, and it drops in price to 280. So you have this $3 option, and the stock doesn't do much for the first week the trade is on, and it jumps down to 280, and you go, oh, I'm okay, because you only lost how much? You only lost about 20 cents. That's the way the decay works. The what? Pretty much like the first week of the trade. Then Another week goes by and the stock goes up, it goes down, it goes left, it goes right. All of a sudden, now the option is worth $2. So your first reaction to the stock not moving is, I'm okay, I'm okay, I'm okay. The next reaction is, oh, this is going to hurt a little bit. And before you know it, the stock moves slightly against you. All right. So you had 20 cents of decay. Then you had what? Really accelerated 80 cents of decay. Then the options it just gets pummeled. Then it's worth about 80 cents and now you have $1.20 a decay. Then it's worth 30 cents. And that's when you throw your hands in the air and go, I don't even give a crap anymore. Then it's worth 0. Okay. By the way, don't forget about that one where you go, I don't even give a crap anymore, because each and every one of you, if you've ever bought an option, has said that. Every single one of you has said that. How could I possibly know that? Because I got to look at your account for the previous, 15 years. Okay. This happens to everybody in the buy side of options. It goes from I'm very bullish to I'm okay to holy crap, this is starting to go against me to screw it. There's nothing I can do to save myself. So I might as well take it to expiration. And of course, the option inevitably goes out worthless. Anybody lived through this before? Come on. All right. It's critically important that we understand just that. Okay. Why? Because what needs to be interpreted by that decay graph, what needs to be interpreted is that was a near money option. It's not what we're dealing with. Now, let's get a little bit more serious. Okay. And this example that I'm going to give you, I'm also going to execute a few trades and pop a few trades in here. Things are getting more interesting. Okay. And again, you can see I've got trades in the spiders and trades in the bonds and trades here in the ES. It's a party, people. Oh, now we're making a couple of bucks. Let's aggregate everything together. How are we doing today? Okay. And how are we doing today? Yeah, we're up about $3,000. Right. This is a pretty slow day in comparison, though, to what we've had. As I said, I have a no holds barred approach here. We will show everything. Okay. So now we're going to look at this $100 stock. Okay. Now, I do not own the stock. I don't want to own the stock. I'm not going to own the stock. Right. So no stock, no stock. All right. In this next example, I'm going to step things up a little bit. I'm going to go out and I'm going to sell an option. And I'm going to give that option, okay, 3 months. 3 months. Why? Because I want to torture you. Okay. And I'm going to sell way out here. I'm going to actually sell, in this example, a 120 call. And for that 120 call, I'm going to collect exactly a $1 credit. And I'm going to bring it down here just so everybody can see it. I'm going to sell a 120 call. And for the 120 call, I'm going to collect a $1 credit. Sell a 120 call, collect a $1 credit. All right. Sounds pretty good to me. Sounds reasonable. All right. How far out of the money am I? The first thing you have to rationalize, that is a huge stretch. That is 20%. I am 20% out of the money. Okay. So let's go through a couple of scenarios here. If the stock stays flat, what happens to my 120 call? Remember, I sold the 120 call. Don't tell me about margin. I don't want to hear about margin. Okay. It's important to understand that the margin can be overcome. And I can actually display that a little bit later. So I sell the 120 call, I collect $1. What's the most I can make? The most I can make is $1. And some people are like, I don't want to be able to collect $1. Don't worry about that, because we can make it more than $1. I'm just using that, okay, to simplify the example. So in this case, though, for me to lose the $1, this stock, whatever it is, has to go up some 20%. Can it happen? Of course it can happen. Nobody gives you anything in this business for free, ever, ever. If you think you found free money, stop. Do not trade it. Email me. I'll tell you why you're wrong. And I don't say that to be arrogant in any way, shape, or form, but there is no free lunch in this business. There hasn't been free lunch in this business since I've been in it. Okay. And that's the late 1990s when I started. Okay. My expertise is volatility and arbitrage. And arbitrage is, well, digging for free money. Okay. Ain't no free lunch. There's no what they term transparent arbitrage. Okay. There has to be a 20% rally. But if the stock stays flat, keep your buck. If the stock goes anywhere down, okay, you make your buck. If the stock goes up, you make a buck. If the stock goes to 110, you're still going to make a buck. If the stock goes to 120, you make a buck. The only way you're losing money here is if the stock gets above what? Gets above 120. But what everybody looks at is they go, I don't like it. I don't like this trade. Why don't you like the trade? The 3 months bothers you. I know the 3 months bothers you. Why do you think I did it? Because I want to show you right now what people are missing. Okay, what people are missing, and this is even going to experienced traders. Let's go to one of the most prolific products in the marketplace. This is the spiders. What are the spiders? Okay, they're the spiders. It's the S&P 500 ETF. Okay, I'm going to close up. I'm going to close up this left side bar, and I'm going to come way out in time. You know what? I'm not even going to go 3 months. I'm going to go all the way out to June. You're like, June? Why would you do this? Because I want to show you something important. Do you see that I have positions here? And again, this is no holds barred approach. Position, position, position. In fact, let me even change the color over here. Position, position, position. You can see I've got positions. Like I've got positions here. I've got positions here, positions out here, even have positions in here. Okay. What are those? Well, okay, we're going to talk a little bit about that. In my first example today, my very first example today, and I will be more than happy to route. Route means send a live trade. Okay. Here's a marketplace that I identified. By the way, I am picking the 495 calls. So I'm going to write those up here, and I'm going to tell you exactly why I'm picking the 495 calls, because this stuff really, really amuses me. Okay. So I'm all the way out here in the 17th of June expiration. Okay. And I am going to sell the 495 calls. And for that, I'm going to collect exactly $1. Okay. Stop. Let's actually route the position. So I'm going to cruise over here. The market's 98 at 104. Okay. First position I'm going to route. Tell you what, I'm even going to route it north of that. I just want to show you guys something really cool. Okay. So, here's a market of 98 at 103. If I route at 102, they'll change the market to 102. Okay. Why? Because at the time I'll be the best bidder, best offer. Okay. Watch. They're going to move the market. It's going to say 102 on the screen. Okay. Ready? If they don't fill me immediately, they must represent me. Now it says 102 on the screen. Why? Because at that point in time, I'm the best offer. You knew that, right? Okay. This is where, again, even experienced people, they go, holy crap, how does he know that? Okay. Yeah. How about I worked in the order routing system for 7 years in Thinkorswim. Prior to that, we made markets. When I say we made markets, I worked in a market making group. This is what we do. This is what we specialize in, right? So I'm trying to sell this at 102. Let's have some more fun. Okay. What's fun about this? I'll show you what's fun about this. See, I'm working an order over here. Let's come in here and let's actually cancel replace the order. If I come in here and cancel replace, the market's 97 now at 102. Let's actually come in here at 101. Work the order, people. Now they're going to change the market to 101. Why would they do that? Why are they going to change the market to 101? Because at that point, I'm the best offer in the world. Okay. I am the best offer. My one lot, Captain One Lot rides again. So now we're a 101 offer. Nobody wants it. Okay. Let's do it again. And when I say let's do it again, people are like, I don't get it, man. Let's come in here. Let's cancel replace. Let's come in here at $1. I'm just making a quick point. It's fill me or represent me to the crowd. When I say fill me or represent me to the crowd, if they don't fill this immediately, okay, they have to move the market then to $1. Okay, work it. Now they're going to move the market to $1. Yay. Stop right there. I'm not going to even push the trade even further. Why? Because I just tightened up the market. The market was 98, okay, at 103. I just tightened it to what? Okay, 98 by $1. So you know that I am the best offer in the world right now. And I'm pretty confident that if I just leave this trade in, they will execute me. Okay, what that basically means is no one can trade this little monkey until they execute through me, unless the market keeps selling off. But let's just leave it in there. Okay, now let's assume, just assume for a second. Let's get crazy. Let's assume that I fill at $1. When I say fill, it means I've actually executed the trade at $1. I filled at $1. Then what do? Okay. Well, I just sold the 495 call. What do? I do absolutely nothing. Everybody's doing something. I'm doing nothing. All right. I'm amusing myself at this point. I decided many years ago, if I was going to keep doing this, okay, it's not about you. It's about me. It's about me amusing myself. You sell a 495 call, you sell it for $1. Do me a favor, assume all other factors being held equal. What is that option going to be worth about a month from now? Because what drives everybody crazy, and I do this stuff intentionally, what drives everybody crazy about this particular trade is that the trade is so far out in time, okay? And it really is, it is that far out in time. And if it's this far out in time, Don, I'm not gonna tie up my money for the next 114 days. I agree with you, wholeheartedly agree with you. You're insane. I don't want to tie up money for 114 days. I want to make money in here. I want to make money. I want very nominal amounts of risk. I want you to realize that I am selling an option so far out of the money, I'm in like the nosebleed seats. In fact, if it's a stadium, I'm not even in the stadium. I'm watching the game, okay, from the parking lot at this point, because that's how far out of the money I really am. You realize if the market had to get back to 495, that would have to hit all-time high. All-time high. Okay, doesn't look like we're hitting all-time high right now, does it? But anyway, the point being of this option, okay, I sell this thing, okay, I'm only going to wait, let's say 1 month. 1 month. Assume nothing happens to the market. The market rallies, the market sells off, the market's completely flat over the month. How much money can you make in decay? Decay inside of the next month. So how to figure that out? Look at the 114-day expiration and look at the 86-day expiration. How much is between 114 days and 86 days? It's 28 days. So what I'm going to do is I'm going to look at the options that are now 86 days, and I'm going to go right to the 495 strike. And if I go to the 495 strike, gold, Jerry, gold. They're trading for right around 51 cents. Okay, so exactly 28 days from now, okay, assuming the market doesn't move, no, make that assumption, I can turn around and I can buy the 495 call, okay, and I could buy it back for, just bear with me here, let's make it right around 50 cents. What do I make on here? I make about 50 cents, or right around 50%. You should be able to make very realistically 50% in 30 days. This is 28 days. You should be able to make 50% in 30 days, okay, without substantiating significant risk. You go, why isn't there a lot of risk? Because in 30 days, it is incredibly unlikely that we can move all the way back to 495 in the marketplace. But we don't just take that for granted. There's ways to reduce risk even further. Do we understand, okay? Do we understand the concept? So when you trade one contract of this, right? One contract, you collect $100. At the end of this, if you did one contract, you would only make 50 bucks. I'm not getting you in this business to make $50. What I'm getting you in this business to understand is that there's an incredibly high probability of profitability in an option that has very small probability of ever being in the money, an option that has an incredibly high probability of making you 50%. What people do not interpret and they do not understand about this market, you want to know what Ultima is about? Ultima is about, okay, selling back month options, because the volatility of the volatility is incredible out there. That the entire professional world, okay, the professional trading world is trading short duration. You're dead. You have no edge in the short duration. You will die and die trying. You trade anything with 30 days or less when it comes to selling options premium. See, people realize that decay is big, decay is bad, decay is great in the last 30 days. But you know what you're missing? If you can make 50% on your money in 28 days, why would you ever wait until expiration? So in the first 28 days, I already make 50%. Should I wait another 86 days to make the other 50%? No, are you out of your mind? That's just insane. So what do you do after you make 50%? Move on to the next trade. Then what do? Oh, you do it again, and then again, and again, and again. How many times can you do this? As many times as you want. What do you think I'm doing in here? Okay, I'm going to close everything up. This is a nominal position, very small position. I'm collecting $220 a day for being me in a very minuscule position, not tying up a tremendous amount of capital. I've got another account here, this account, and this is extremely, in fact, these are small, okay, options. This account is literally collecting just, and again, I just want to look at the MES position. This one's $50 a day in decay, plus another $5 here. This is theta. That's the symbol for theta. In fact, I can highlight this. This one here, right, is collecting $50 a day. In fact, if you add this little $5, that's another $60 a day. Then I have another 116 a day. So net, what am I collecting a day? Oh, just shy of about 400 and some odd dollars a day in decay. And I'm not tying up in this entire account nominal amounts of capital. And I'm going to tell you something right now. This position's a little bigger here in the spiders. Okay, that's the, put on your big boy pants, because that's a real position. Nevertheless, okay, are you collecting $300 to $400 a day in decay? Okay, for sitting on the sidelines. I don't have a position in here that's even close to being hit. Not even close. This one's almost at 50%. I got positions here that are up. Okay, this one's almost in a 50%. This, I mean, again, we are in a good, very, very good position right now. Now, I just did a trade in the spiders, and you go, will that work in the QQQ? Sure, why not? Why wouldn't it work in the QQQ? I mean, let's do the exact same thing in the QQQ. In this case, let's just go out 86 days, right? Can we go out 86 days and then look at like the 50-day? Of course we could. Because again, everybody's, they're very curious at this point. So let's do it. Let's do it. Okay. But let's find an options trading right around $1. There's one. Okay. Here, the 395s. If I sold the 395 calls, for instance, by the way, I'm using calls today. Why am I using calls? Because it's easier for people to interpret. I can use puts. I'm going to talk about puts here in just a moment. But I'm selling these calls, and I'm selling the calls for, like, let's call it $1.05. The market's 103 at 107. So I could sell these little monkeys here for about $1.05. What would these 395 calls be worth when there's only 50 days left? And the answer is, I don't know, go 50 days left. Okay, and go look at the 395 calls. 395, 395, 395. He's scrolling, he's scrolling, he's scrolling. Boom! Look at these. They're only going to be worth about 37 cents. So now I'm selling something with what? Basically $1.05. Be able to buy it back for about 37 cents. When was the last time you made 60% on your money in 30 days? Okay, without having to substantiate. 395 is kind of far away. In fact, when you get to 395, that's all the way back up here. The market has to go all-time high for you to start really getting killed in this particular position. And this is run of the mill. People, this is what Ultima is about. Ultima is not about selling options. Ultima is about selling the right options. Ultima is about understanding, okay, that the option decay has actually shifted to back month. And it has not to do with decay, but it has everything to do with volatility. So I say, why sell options so far out in time? And again, you may have noticed in my example, I sold options 3 months out in time. Okay. Typically, though, everybody's out there and they're like, I'm going to sell me short dated stuff. That way I don't have to wait that much. You should be thinking the exact opposite. All the market making firms are trading those short duration options. Do you want to compete against Citadel? Do you? Because if you do, you should sell short dated options. You're going to get killed by them. Absolutely killed. That's why you're tuning into this webcast. That's why specific criteria, when I talk about criteria, it's the critical difference. Okay. It's what we do here at TheoTrade is it's not about, oh, we should sell options. It's about the fact, okay, that the options you're selling are the right options. You know what? I'll further this, and I wasn't planning to bring this up. There was actually an entire paper written by Goldman Sachs. Okay, realized volatility in 2021 pricing. This entire paper written by Goldman Sachs, I don't mind bringing it up. Okay, talks about selling back month option premium. This is what we call a white paper. By the way, we've been doing this now for over 18 months. This is, something we've been doing. And again, this entire article, okay, sharp swings in implied volatility have brought VIX futures realized volatility to rarely seen outside of a major crisis. This is the place to be. And it even goes into the fact that this is precisely what you should be selling is not short duration options. We expected volatility risk premium take years to fully normalize. We're going to be doing this for years, okay? Again, it's phenomenal. And it goes on in this particular article. And again, I had no intention of pulling this up. All right. But this particular article emphasizes that, again, the back month premium, the VVIX justifiably spiked, okay, hasn't backed off, goes into how ultimately Fed hikes. It's all going to be about back month option premium. All right. That's what we are here to do. And we've been on it, okay, longer than anybody has actually been on this trend. And we talk about it substantially. Why? because it's not abating. It's not going to abate, right? Listen, 90% probability and the 10% hammer. The one aspect, though, I want this to resonate with you because some of you have actually sold options premium in the past, right? And you probably learned trades called iron condors. How many people here have ever learned an iron condor? Anybody? So a lot of people have learned iron condors. And I want to give you, when you're watching this presentation, you are probably thinking about that 90% probability, which sounds really good in context. But as I told you, there's the 90% probability, but you should be thinking to yourself, what happens to me the other 10% of the time? And the other 10% of the time is what we call the hammer. For those of you that have no idea what an iron condor is, an iron condor goes out and it sells an out of the money call way out here. Then it sells an out of the money put way down here. And then it buys an out of the money call and buys an out of the money put. And the risk graph looks something like this, right? That's not easy to do. Add just the right amount of caffeine for that one. Anyway, the risk graph, basically there's this huge area that you're going to be able to make money in. But if we stay in that area, you make money. If we move outside that area, you lose money. And most of those iron condors, okay, have about a 90% probability. But here's the crazy thing about iron condors. In today's marketplace, you have zero expected return in iron condors. Zero. The skew is actually too large on the iron condor. They don't work anymore, okay? They did. If you ask me this, 6-7 years ago, iron condors were doing extraordinarily well. We had some bouts of volatility. 2018, we had some big bouts of volatility and it was okay. You probably could have gotten away with it. Not now, okay? Not going to happen. And what I want you to understand, for those of you that have sold iron condors or any high probability trades, this is the way that people transpire in high probability trading. 90% sounds great, okay? But when you're wrong, you get hammered. And the way that the market works is it's evil. People, it lures you in. So those of you that learned iron condor, you probably took a class. You paid $500 and you go to this class and they teach you an iron condor. And you go, oh yeah, this is good stuff. Because the very first time that you do an iron condor, first of all, what product did you do your iron condor in? Huh? Okay. What product did you do the iron condor in? Don't lie to me. You did it in the spiders. You started in the spiders. Nobody starts in the SPX. Okay. You started in the spiders. So when you started in the spiders, you're like, I did an iron condor, and you sell these way out of the money options in there. By the way, markets are getting killed right now. Okay. Sorry, I'm distracted because I am watching out of the corner of my eye. And if you want to see, again, as I say, no holds barred approach here. Okay. I like to look at P&L, which again, we started this, webcast that was -200. Now we're up $5,000. Okay. In this particular account, we're rolling pretty good over here as well. Profit and loss from the open of these positions is about $2,000. Okay. We're doing just fine today. So again, I am geared, locked and loaded for heavy volatility, heavy right now. So if this is going to happen, let's bring it on. Okay. So what people do is they go out and they sell these way out of the money options. And it works. And you do it in the spiders. And the first time that you dabbled in this, you did one contract. You go, ooh, I made money. Of course you made money. The trade had a 90% probability of success. What did you think was going to happen? So the next month you go out and you do the very same trade. And you know what? The next month, instead of doing one contract, you go, I'm squawking my stuff. You do 3 contracts in the spiders. So your 3 contracts in the spiders, it too makes money. By the way, by the 3rd month, okay, you're no longer going to trade the spiders. Now you're like, yeah, 2 months in a row, I made money. That class was worth it. And of course, in the 3rd month, you go into a product that you don't know very well. It's called the SPX. Nobody tells you that the SPX is the mother of all products. The SPX is the widow maker. So you go into the SPX, and the SPX, you do a 1 lot in the SPX. By the way, the SPX is precisely 10 times the size of the spiders. So I always tell you that the SPX, put on your big boy pants. I know the product well. I made markets in there. So you go into the SPX and you trade it. What happens? Holy crap, You make money 3 months in a row. You were unstoppable. Now you're the next Warren Buffett. You're literally walking around, the house squawking, got the feathers all up. By the way, on the fourth month in the SPX, you do a 10 contract trade. And like the market literally looks at you, goes, come on, come on. As soon as you route your 10 contracts, it goes, we got one. And the marketplace just erupts into volatility. Okay. You don't last. You get damaged. You're damaged goods at this point because that 10 lot SPX iron condor goes horrifically wrong. You lose the profits of the first 3 trades, plus it takes half of your trading account along with it. And when you hear this story, a lot of you people will go in there like, holy crap, man, that's like exactly what happened to me, man. No kidding. I looked at your account for the past 15 years. There's nothing that we haven't seen before. Every nuance that you've ever thought, but I could have used a stop order. Oh, great. So you got yourself stopped out in the SPX. By the way, the SPX and heavy volatility, the bid offer spreads can get $10 wide. You did a $10 wide iron condor with $10 wide bid offer spreads. You're guaranteeing yourself a loss. Like, just stop. It's a train wreck, right? The losses exceed your gains of the previous 3 or 4 trades. Again, when I say it's like I could see your account, I could. I've seen this movie before time and time again. Okay. So how many people have actually experienced just that? Anybody? Anybody? Come on, people. Admitting it's the first step today. What we need to do is to learn to do this the proper way. After you take this really, really large loss, you're not entirely deterred. You just lost half your trading account because you sold option premium. And I say, you're not deterred. You go back and you take another class and they say, yes, what happened to you is common, but you can fix it. You can fix anything. Okay. Fix is a very dirty word. Can't stand it. I'm a total cynic when it comes to fixing trade. All you're doing is just get out a shovel and keep digging. Fixing a trade, the very notion of fixing a trade throws good money after bad. Think about it. When you're fixing a trade, and any time that you're fixing a trade, you're adding more risk to an already losing trade and racking up transaction costs. How can a fix be good? Some fixes may work, but the very notion of fixing a trade, again, throws good capital after bad. Listen, you need to take your trade and do this right. Okay, you need to learn to correct good trades gone bad. Fixing trades, the best analogy is like take a car. If you took a car and you drove it off of a cliff, and you brought it to a body shop, what would they tell you? They go, what am I supposed to do with this thing? They go, make it look like new. And they're like, yeah, this guy's crazy. It's totaled. It's completely totaled. They go, no. I want it to be okay. Listen, you got to learn the right way to structure these positions. Okay. And again, it is critically important. And the interesting irony of a lot of this is people like, this is the path that people go down when they learn to sell options. They learn iron condors, then they get hammered. Then they learn to fix trades, then they get hammered again because they're not seeing the bigger picture. They're not learning to sell options premium correctly. Now I'm actually going to show you a little bit about the full Monty. See, the thing is, what we're describing right now, this is not the business like people talk about, like market makers and stuff. And okay, when I was in the market making business, this is not the crap we did. This is what you need to do as a retail trader. Okay, there's no analogy between a market maker of the 1980s or 90s and what a retail trader is today, because they're completely separate business. It's a completely separate business. What we learn here at TheoTrade comes from the brokerage side of the business. All right, here's what I'm intent upon doing, the spiders. Let's bring up the SPY. SPY is trading at what? What's it about? 426 right now? It's dropping fast. Okay, SPY is at about 426. I'm going to go way out here and I'm going to sell, for instance, some 495 calls. Before you know it, I'm going to sell, for instance, some 500 calls. Okay, I'm going to sell, for example, some 510 calls. Okay, this stuff is way out of the money. Consequently, I'm also going to go out here. I just did this the other day. I sold. Okay, I'm going to sell a 320 put. I'm going to sell, for instance, a 315 put. I may have already sold, okay, a 340 put. okay? What is this? I've sold a bunch of out of the money calls. I've sold a couple of out of the money puts. That is what I call inventory. You're no longer a trader. You are in the inventory management business. However, before I go any further, what's wrong with this picture? What's wrong with this picture? So the spiders are sitting right at 426. That's where they are, right? In fact, okay, again, I don't mind. I think I'm probably a couple pennies off, but bring them up, okay? Where are the spiders at right now? That's the Qs. Spiders, there you go. They're at 426 and change. All right. So they're at 426 and change. What can happen? Okay. What could happen? I don't know. So here they are at 426. You sold a bunch of out of the money calls, sold a bunch of out of the money puts. What do? Just go out there and sell them and get down on your hands and knees and what? Okay. Now just go, I pray. All right. You got to have inventory. Got to have inventory. This is the inventory. The inventory is a sell stuff. I sell stuff with the intent of buying it back for much less. Okay. Very similar to how a lot of companies actually, rotate through inventory. By the way, many companies that you do business with sell inventory short, meaning they sell you stuff that they don't even own. And it's true of like computer companies, for instance, that, they sell you the computer, then they turn around and build it. Okay. All right. Dell Computers like slaps that crap together, shoves it out the door. But the point that I want to make over here is what's the problem with this? And I'm going to tell you exactly what the problem with this is. The problem is what happens, okay, if you wake up one day, we're no longer trading at 426. Where are we trading? Oh, let's say you wake up and boom, we're right down here. Okay. All of a sudden, market gets slammed, volatility explodes. Has anybody ever woken up into a marketplace like that? What are you going to do at that point? Markets are completely unpredictable. Don't tell me you're like, I'm going to do this and this and this and this. You're not doing anything but getting annihilated. You wake up and markets are limit down. You know what limit down means? They do not trade. They don't trade. They go boop. They open it to 7% circuit breaker. Now what are you going to do? You go, I'm going to wet myself. Okay. You would never be able to sustain the risk. Okay. The point of me bringing this up is to scare you. The point of me bringing this up is selling options premium has inherent risk. The risk is of a wild or unforeseen move, which could also transpire to the upside or the downside. Remember, we're on both sides of the marketplace, and you should work both sides of the marketplace. There's huge killer amounts of premium right now if you understand this stuff. The edge is the back month premium. The edge is in the skew. What people can't do, though, you can't just go out there and just sell and do nothing, okay? What we need to elaborate upon is how, okay? How can you control that risk? If we start one day at, 426 and the end of the day, we're trading, for instance, 350. People, it's a catastrophic move. And that catastrophic move could absolutely decimate even the most experienced traders. Enter the hedges, okay? We are going to have hedges in place. What is a hedge? Well, we're going to discuss that, okay? Got to have some hedges. There is going to be 3 hedges in place, okay? Or one of 3 hedges. The first one we will discuss is actually called an RTS, better known, okay, as risk twist spread. This is a risk twist spread. The second one, okay, is a VVS, better known, okay, as a VIX vol spread. Cover that in a second. The last is what we term a gamma iron. Those are your hedges. All right, time out. Do you always have to have, okay, something on to reduce risk? Absolutely, unequivocally, yes. Okay, the hedges, albeit, okay, minimal, allow us to operate in a marketplace that can be wildly unpredictable. The hedges, okay, are what allow us to operate in heavy volatility. Now think about this for a second. Could you wake up one morning with the market absolutely getting annihilated on you? Of course you could. Like if you haven't done that before, that's just because you haven't been around long enough. But Some of you, if you traded even in 2020, there was 3 weeks of sheer terror, days of the marketplace sold off, 8, 10, even 11%. About March 16th or so, markets got killed. Think about this. What's the, for instance, a VIX volatility spread? Well, I'm going to explain it. Okay. The VIX volatility spread. What does the VIX do? If the market goes down, the VIX goes where? Up. The VIX explodes in price as the markets tank, typically, but a real violent move to the downside. I mean, a move that is just, puking your guts out in the marketplace, the VIX will explode. Imagine you had a very inexpensive. In fact, it cost me nothing up front to put the VIX trade on. Imagine you had this little trade on. It just sits out there in space. Most of the time, nothing happens. But once in a blue moon, the marketplace erupts into flames, the VIX explodes, and your little trade, okay, that cost you a negligible amount explodes in price. And it explodes in price just enough to mitigate the risk. These hedges are what we term preemptive hedges. Effectively, when are they on? They're always on. If you're going to have inventory on, you have to have a hedge on. Is the hedge going to cost you something? Sometimes. Sometimes you can actually whittle those away, okay, for next to nothing. But the hedges allow us to operate in a marketplace. Without them, you're nothing. You will not survive this business if you don't understand the ways to mitigate risk. So once again, let's bring up the SPY. And the SPY is trading at 426, okay? And we're going to sell out of the money calls. We're going to sell, for instance, as we did earlier, a 495 call, okay? And we're going to sell, for example, okay, a 505 call. And we're going to sell, for example, okay, a 510 call. Again, and I could layer positions all over if I wanted to. Just so you see, though, there's just 3 options out here. That is it. Consequently and simultaneously, okay, I'm going to sell in this one a 330 put. That's going to collect me about $2. I'm going to go out and I'm going to sell, okay, a 320 put. Okay, I'll even sell maybe a 300 put. All right, inventory, inventory, inventory. This is easy to manage. And people look at this for the first time. They go, oh, I don't know if I can handle that. It looks like a lot's going on the screen. It's not a lot going on the screen. I know you see some writing on the screen, but you want to see what a big inventory looks like? Here's a big inventory. Okay. By the way, this big inventory, it's scary. This inventory is 30 deltas, which means absolutely like nothing to most of you, but 30 deltas means there's no directional risk. And I'm collecting $140 a day for taking almost no directional risk. 30 delta is the same thing as 30 shares of the spiders. You don't have to know what delta is. You don't have to know. 30 delta means I have this equivalency of 30 shares of the spiders. Most of you have more risk on. Are you collecting $140 a day? I am. Okay. Think about this. Now, okay, what can happen to you? I'll tell you exactly what can happen to you. What you've done, if positioned correctly, what you've done in here is you've laced in right in here, okay? That's your VIX vol spread. The VIX vol spread. Because one morning you're going to wake up, the market's going to come down, and the market comes down and comes down in a vicious, vicious manner. As that market comes down, this trade is going to bounce higher in price. And it's actually going to lay down like an umbrella, if you will, over some of the positions that you sold. Is it going to mitigate 100% of the risk? Absolutely not. You don't have to control all the risk. You only have to control enough risk, okay, to be able to weather the storm, or you control some of the risk and go, whoa, it's a good thing I had that VIX volatility spread on because it let me out of all my other positions, okay? I'm out, baby. I'm out of the contest. You're out, you're alive, okay? And now you can go in and actually sell more premium in the midst of the heaviest volatility you've ever seen. Think about this. You got to be able to operate, okay, in a marketplace where most people panic. Like, do you think that this marketplace is going to be easy in the next couple of years? Absolutely not. Okay. They always say this terminology. Don't fight the Fed. You know, they say that when the Fed is out there buying bonds. They say that. Don't fight the Fed when the Fed has got your back, baby. All the bullish people, don't ever fight the Fed. Don't ever fight the Fed. How many of those same people are out there right now saying, don't fight the Fed? What's the Fed telling you? We're going to raise rates. What's the Fed telling you? There's going to be quantitative tightening. What's the Fed telling you? Volatility, volatility, volatility. It's here. It's coming. You can't operate. You're never going to be a good enough stock picker. It's not going to make a difference because if this market goes down everybody's going with it. Everybody's good. You cannot be a stock picker. I don't want to hear, oh, this is the greatest stock picker ever. You go down with the marketplace. Why not just sell some premium, mitigate the risk? This is the way that people should operate in this business. Okay. The VIX volatility spread separating between you, okay, and a really dire move. And you don't, you can even learn the VIX volatility spread, learn how to actually control risk in a portfolio. It works for a portfolio, but it also works unbelievably. Like, you want to make yourself into an inventory manager. You want to be the Amazon of options trading. And as I said, like, people always look at this and they go, well, do you do this? I'm telling you, you need this in your life and you need it right now. Do I do this? Okay. As I said, no holds barred. This is just one of the portfolios. By the way, this Theo Theta portfolio, this is what our clients see. This is what our clients see. We send out these trades. These are the trade alerts. Okay. This is like literally text messages, push notifications. You get to see every nuance. That's why I said everything I do is like no holds barred. I don't care. If I have a bad day in the marketplace, you should be able to see that. If I have a good day in the marketplace, you should be able to see that too. Okay. Again, got all the spreads on over here. We're, oh, look, I'm losing on this one, but I'm making money on other spreads. Okay. We're making money on almost every position that we have on in here at present time. Again, listen, this is why you want to sell premium. Premium can now be sold in small accounts. You have to have $5,000 in a retirement account to sell premium, the way that I'm doing. Okay. And again, this is, and I stress to you, here at Tasty Works, that's my IRA. So, this is my IRA. I am selling options premium in the IRA. I don't mind showing you, this is a good sized position. It's tying up $9,000 in margin. It is only tying up $9,000 in margin, but it's actually producing, in this case, okay, pretty considerable returns on a day-to-day basis, right? Just based on premium, right? Produces positive theta decay, may enhance existing positions, provides a high probability of success. I'm not buying or selling the stock. There are times where I will trade stock. I have the capital for it, okay? But this, Ultima, okay, you do not have to buy or sell the stock. And you could be wrong on market direction. I'm not here to tell you about a MACD or Fibonacci, because do you really think that there's timing to this marketplace? There's no timing when you have geopolitical risk. Boom, geopolitical risk, bam. Next thing you know, the Fed comes out, boom, going to hit you with, a 50 basis point increase. There's too much in the world right now to try to discern any real bias. I'm telling you, if you want to survive the next couple of years, this is not going to be a flash in the pan of volatility. This is going to be volatility that is going to be hideous and prolonged. You need this in your life. Selling premium can be done, okay, in retirement accounts. Selling premium can be done with as little as $2,000 in a margin account, but you got to learn to do this, okay, for consistent returns while mitigating that risk. Listen, you want to learn to do this the right way. We're going to discuss criteria. Criteria is the specifics. It's the nuances behind being able to do this and do this the right way. It's learning how to create those hedges. Before I do that though, I'm actually going to give you a few live trading examples, right? Variations of all of the trades that I'm about to show you can be done with as little as $2,000 in a funded brokerage account. I do realize, okay, that I have mentioned that very fact, okay, about 20 different times, because the biggest hangup for a lot of people, the biggest hangup is, I don't have the capital to be able to do this. And I think that's not a valid excuse anymore, because I just showed you, I showed you an IRA that I had almost $10,000 tied up. It was a retirement account. But if you had a regular marginable account, that would only tie up $5,000, actually even less than $5,000. So I just don't think it's a valid reason. Like, you can do it with $2,000 in your account. You don't have to build a $10,000 position. You can do this with, again, very nominal amounts of risk, okay? And again, it can be done inside of a retirement account. What I'm going to show you right now, okay, is all the trades from last year in what we term the Ultima portfolio. Again, it's not ultimate, it's Ultima. Ultima seeks to sell options, okay? It seeks to sell options with a fairly great distance between us and expiration. What I'm going to show you here is all of 2021. You know what? I don't think it does anybody any good to see like, oh, what are the trades you did, this year? You want to see the trades I did this year? Here, okay? I don't mind. Just cruise over to my account statement. Yeah, you can see everything I did. I don't care. People can see the P&L in this particular position. Okay, what am I up? Here, everybody wants to see, what did you make so far this year? I don't want you to sit here and like, oh, he's got so much money in account. This is not a huge account. Okay, this is not a huge account, but that's the P&L year to date. This is just, okay, one account. It's up $80,000 year to date. Okay, I know where we are in February. It's not about being bullish or bearish. It's about selling premium. Okay, and by the way, this is Thinkorswim. It's a live trading application. There's no if, in, or but about it. You see the P&L moving in real time. Okay, I mean, look, there's strategies. Look, I lost money in the XLE. I've made money here. I've made money in NVIDIA. Okay, I've made money here in the NASDAQ futures. But it's, again, this is about as real as you get. And here's a $6,000 today, right? So it's important that you understand that what you're seeing on this screen comes from here on the Thinkorswim, my account statement. If you look at the trade history, it's just opening trades, closing trades, opening trades, closing trades, right? This is the exact kind of stuff that I'm actually showing today. So I started with Tesla here, just to make a quick example so you could see it. This is the opening date. Let me just circle stuff so you know what we're looking at. It's the exact opening date, the closing date. To open, to close, Tesla, the expiration cycle, the strike I traded, this is a call, the opening price, the closing price, and the return, okay? All I did is just showed you individual trades. Now, I'm gonna take you through like that through all of 2021, which is, here we are on slide 35. We're gonna be on slide about 135 here in a couple of moments, because just to show you every trade that I've done, every single trade that I'm showing you right now, okay, this is live premium selling. These were done as trade alerts. It's part of a portfolio, okay, that we actually call the Ultima portfolio. It's the Theo Theta Ultima portfolio. Here's a trade. It's a bond short put. Now, time out. I use Tesla as an example because it's kind of fun, but I like bonds. Okay, I do. I trade some bonds. You go, I've never traded bonds before. That's okay. Okay, that's okay. So you can see the exact time frames. Somebody said there's no mention of time frames, but you see the expiration. It's all in here. So this is a bond short put. You don't have to trade bonds if you don't want to. I like them. I've always traded bonds. Okay, so here's a bond short put, 57% return, bond short put, 53%, IWM short call, 62%. Well, you can see all the expirations right in here. As I said, here we are, here's the expiration, here's what I opened and closed the trade for. Okay, it's all there. 53% return, Tesla 76%, SPY short put 60%, 50%, 51%, 57%, 49%, 50%, 62%. Now we're in the QQQ, 53%, 50%, 50%, 64%. We're still in the QQQ, 53%, 56%. I skipped one. There's 57%, 56%, 50%, 54%, 90% loss. Oh, take the good with the bad. It happens. 54% QQQ, 52%, 49%, 47%, 49%. Okay, bond short call. By the way, you notice anything unique about here? Okay, no. I just trade the exact same crap again and again. So far, you've seen what? Spiders, IWM, QQQ, some bonds. I threw Tesla in there just for the hell of it. 54%, 51%, 50%, 50%, 53%, 51%. Okay, 50%, 52%. Okay, and again, we're into what? We're just starting right now into the second quarter. 53%, 51%, 56%, 52%, 50%, 50%. Oh, look, there's Mo. Okay, 53%. There was another Tesla. Oh, look, there's an Amazon in there. I saw it. 63%. This is every single trade in the portfolio that was blasted out to the masses. Now, time out. At this point, last year, I had to get everybody used to the idea of selling premium, okay? And after we've gone through, 5-6 months of selling premium, then we actually step things up into the S&P options on futures. And the reason we did this, an S&P options on futures is exactly 5 times the size of the spider. So we just increased size, that's it. So now we're trading S&P options on futures where I sold for 13, bought back for 650, okay? 50%, 50%, 50%. And again, QQQ, ES short put, 51%, 50%, 51, 60%, 53%, 50%. Okay, we're just cruising along over here. As we start to scale forward, now we're actually into summer. As we start to kind of scale forward, then I actually jump you into another strategy. Now, this is what we call a Christmas tree spread. Christmas tree spread is a little bit advanced, but it's actually how to sell premium and kind of bulk it all together. Okay, the Christmas tree spread is actually done in the spiders. It's for a $21 credit closed for a $3 debit. It's an 85% return. These are extraordinarily powerful trades. Okay, I'm still trading some Qs and some TLT and some S&Ps on the side here. Okay, but again, you can see every single position done. When I'm using Christmas tree spreads though, in the Christmas tree spread, It packs a huge punch and allows me to trade less trades, but do more inside of one transaction. Here's one actually opened, okay? In August, closed in October for a 92% return. And again, very, very heavy credits. This is thousands of dollars, okay, in P&L. This is ES 52%, 52%, 53%, okay? No time, no problem. Listen, everything I just showed you, and I just gave you pretty much, I mean, literally, it's all of every single trade that I shot out through a text message or push notification, a trade alert inside of the portfolio for all of 2021. Now, that's a pretty substantial portfolio. We also have a portfolio called the Theo Theta small portfolio. That's exactly what this is. This is for smaller account size. This will actually work for an account, okay, as small as $2,000. And in the Theo Theta small portfolio, all we do is just take the same logic, the same strategies, and apply that to smaller accounts. As I said, no time, no problem. The trades I'm showing you, okay, were displayed live here at TheoTrade. And we continue, when I say displayed live, and that's just, talking you through them, okay, we're actually sending those out in messages. Additionally, we even do like weekly videos. The trade results that we're showing are perfect for part-timers. You're not going to have to sit there all day and wait for the text message, right? In terms of like text messages on these trades, there's only a couple that come out here and there. Sometimes we'll have 3 or 4 text messages in a week. And you got to wait like another 10 days before you even get another one. Okay. This is very, very hands off. Like selling premium is not intensive sitting in front of the screen all day. You can even use good till canceled orders. In most cases, in a fraction of your time is enough to see results. It's a phenomenal time to do this because most people are working from home. If you're not, that's okay. The advantage from working from home is, you're doing this off the side of your desk. Okay. It's a great way to emerge from the pandemic stronger and in better financial shape. Moreover, though, something I should probably add to this is what better time? Please, they're raising interest rates. Inflation is exploding. Okay. This right here, right now, is premium sellers paradise. Look what our members are saying. Some recent stuff in here. This comes from Jim Ryan, February 10th. Don, bought 4 contracts to SPY for 296 and closed out 4 earlier for 657. Could have waited, okay, but that's bit me in the past. Okay, others in the chat room, this is an example of why your TheoTrade membership pays for itself. Roughly 350 times 4 contracts, 100 shares per contract, $1,400 profit. Paul, Jim, I agree. Okay, I think many people here, the cost of TheoTrade annual membership, okay, nearly every trading day. That's like a 251 return. Okay, Kevin, TheoTrade's the best by far. I'll be with them for the rest of my trading career, no questions asked. And this, this is not an unusual. I just grabbed a couple of quotes outside of our chat room. This comes from a little longer ago. Kevin Burks, I absolutely love this freaking website, TheoTrade. There's so much here, so many different flavors. I can't pull away for more than 15 minutes. Can't get any work done. I could go on, but here comes the short that I'm waiting for. So there's some characteristics of selling Ultima Premium. Now, the attributes of this are undeniable. You never have to buy or sell the stock. Risk is going to be dialed into precisely your comfort level. We don't use stop orders here. I want to make that very clear because that's a big, for me, a no-no. We do not use stop orders. Okay, time frame can vary and you can actually minimize your risk. The probability of profitability is incredibly high. It's a perfect strategy also to enhance one's stock portfolio. One thing I want to just take a moment and mention. Do not think I'm delivering this to you just because I want you to sell options premium. I recognize that some of you may have a 401k. You may have an IRA. Okay, you have a retirement account. You have stocks that you have very low basis in and you don't want to sell them. You can actually use this exact logic against that portfolio, meaning that you can actually sell premium. I'm not talking about a covered call. Okay, forget about the ideals of the covered call. You can actually use Ultima logic against a portfolio, all right? And in doing so, really enhance your returns. Like forget about dividends. That's not even gonna outpace the inflation right now. You think about like dividends, they mean a lot. Oh man, I can get dividends at 3% with 7 to 10% inflation, okay? All right, it's a great way to go broke very, very slowly, but it's not a good idea. You want to sell premium against the existing positions. It's an excellent tool, though, for those looking to build a smaller account, but it's also viable to use in any account size, including retirement accounts. New products have now made it viable to sell options premium, again, in any account size. Now, building a portfolio of options. I realize when I'm going through there, I sell a bunch of out of the money calls here and I sell a bunch of out of the money puts here, and I'm talking about a VIX volatility spread. Please do not let the options portion of this discussion intimidate you, because I don't think that it's not fair. It does take a little bit of time. Like selling premium, okay, can be done for minimal credits and minimal risk. But the sale of premium, like learning how to do this, it's like learning how to use a power saw. You read the manual, figure it out. But if you don't know how to use a power saw and you just flip it on and try to shove a 2x4 through it, you lose a couple of fingers. Options can be the exact same thing. Options can be the quickest, the fastest, the safest, the easiest way, okay, to get where you want to go in the stock market. But if you do not know how to use them correctly, you can lop off a couple of fingers. Listen, I'm telling you, anybody in here can learn to sell Ultima Premium and minimize risk. Maybe you have limited options experiments. Maybe you don't know anything about options. Okay. As I said, you don't let that portion of it intimidate you. We can get you ramped up, right? That is what we do here. You need these strategies for the foreseeable market future. As I said, and I don't mean to scare people, but there's just one, okay, crystal clear reality right now. Is what you are presently in this market is different than anything we've been in since all the way back to the times of the financial crisis. And it is, okay, that serious. The Fed is going to raise interest rates. They are going to do quantitative tightening. They don't have a choice at this point in time. And what you're going to see in the future is going to be downright hideous. And I say be prepared, not scared. I threw that in there specifically because you can see it. I mean, it's clear. This doesn't necessarily mean the marketplace is going to outright tank, okay? But the days of meme stocks and the days of like, don't worry, man, I'll just buy crypto and I'll be a crypto millionaire, they're over, okay? They're over. Now, this is going to be the trader's paradise. This is going to be the premium seller's paradise. We can show you how and when to sell premium. It does take a couple of hours. What we do here at TheoTrade is we create detailed recipes for every strategy, including selling Ultima Premium. The way I think of it, you wouldn't bake a cake without a recipe. Why do you trade without one? Okay, this is what you need to know to successfully sell Ultima Premium for a living. Think about it. Like when we get into criteria, and again, criteria, it's the nuts and bolts behind this. Criteria is the specifics. Okay, it's what options expiration do you use? For instance, what underlying stocks or indices make the best Ultima Premium selling candidates? You tell me. You saw what I did, right? Okay, you guys saw exactly what I did. What products did I use? Right? What products did I use? Oh, I went out and I used the spiders. I used the IWM, the QQQ. I used the S&P options on futures, traded a couple of bonds, threw a little Tesla in there, right? For a little spice. Okay. Actually, you didn't see the SPX. You did not see the SPX. It's the mother of all products. I'm not comfortable trading the SPX in front of you because I know what the SPX is. Okay. And what is it? It is the beast. Okay. If you don't know what that means, then you haven't traded that product before. It is the beast. And from the beast, there is no escape and no return. So you really better know what you're doing, but you got to have the right candidate. Why? Okay. What volatility should I seek out? Here's what's interesting about Ultima. Too much volatility, you're dead. Too little volatility, you're in serious trouble, right? Volatility plays a critical and pivotal role in Ultima Premium selling, pivotal role in it. And you go, well, what happens if the marketplace gets crazy? Listen, the marketplace, it is crazy right now. It's just getting better, but you can't go like, if somebody goes, can I do this in GameStop? And I go, oh, you can't. Can I do this in Zoom? You don't want to, okay? You don't want to take extraordinary risk. All you want to do in this business, get out there. This is not supposed to be heart pumping fun. This is supposed to be get out there, create a business, sell some premium, manage the inventory, get back, get hedged, and let the P&L roll in. Hopefully the P more than the L. All right. What volatility should seek out? You need to be spot on. What options expiration do I select? I just want to show you something interesting about options and options expiration. Just look at the spiders. Okay. 0, 2, 5, 7, 9, 12, 14. Look how many option expirations there are. We will dial you into precisely the right expiration cycle for Ultima premium selling. Precisely the right expiration cycle. Too short a time, you're in trouble. Okay. Too long, okay, you're also in trouble. You have got to dial in. This is what criteria is about. By the way, most people don't know this. The SPX, they start trading daily options expiration in a few weeks. So you're going to have Monday, Tuesday, Wednesday, Thursday, Friday expiration. It's a party, people. Okay. What should be the delta of the option I sell? Okay, we're going to give you the probability of the option you sell based on delta. What options do I buy against my position? This is the hedge. How do I reduce risk? How do I build a VIX volatility spread? In fact, how do I build a position? When I say, how do I build a position? Hey, those VIX volatility things, how many of those VIX volatility things do I do against how many options do I sell? Right? How many options can you sell in the spiders versus how many options should I buy in VIX? That's how you build a position. We teach you that. Do I need a larger amount of capital in my account? No. And I keep throwing this in here because this is where everybody constantly says, right? Everybody constantly says like, hey man, I only have 2 grand. Like, I get it. I understand. That's all you're going to need. What's the right amount of risk for you? We can help you dial that in, predicated on the account size. You give us the account size, all right, and you'll be able to go through and actually tailor the portfolio risk specifically for you. What are the percentage returns supposed to be? This one I will give you. It's 50%. You're just making 50%, move on. It's rinse and repeat. It's rinse and repeat. All we want to do is churn through the inventory. I can't stress that enough. Churning through inventory is critically important, okay? You're playing hot potato. The second you make 50%, on to the next, 50% on to the next. Look, okay, I sift through my inventory all day long. When I say sift through inventory, like I'm not joking. I'll go through inventory here and I go, is anything up 50%? Look right there. You see that? That trades up 50%. Okay. I originally sold it for $850. Now it's trading, you know what? 405. That's only $225. Guess what? I'm out, baby. I'm out of the contest. Okay. As soon as I'm done here, I'll be closing this. Okay. If I look at my ZB position, that's up 46%. I'm ready to close. Right? That's all you have to do. That's managing the inventory. Okay. How do I protect myself from market crashes, VIX volatility spreads, gamma iron condors, risk twist spreads, right? Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. By the way, the idea of a recipe and criteria, it stems from when I started at Thinkorswim. I was 24 years old. I flew all over the world for Thinkorswim and for TD Ameritrade. When I say all over the world, literally, I've done sessions in Singapore, Indonesia, Australia, you name pretty much a major city in the United States, Canada. I have probably not only been there, I've spoken there. And sitting on aircraft, I always get bumped up to the front of the plane because I flew a tremendous amount. And it's in the aircraft, and I always watch these pilots go through their pre-flight checklist. And I always thought to myself, I'm like, holy crap, that's the same thing we do on the trading floor. In fact, I used to have conversations. I'd had conversations all the time with pilots as they'd be going through the pre-flight. Okay. I mean, it's pretty boring. And they go through the pre-flight, you're on the plane early. I have conversations and be like, man, we did the same thing back on the trading floor. I think that's the only thing that, you know, kind of resonates from my trading floor like days is that everything we did on the trading floor is all pre-formatted. Everything we did on the trading floor. You know, you see all these people down there, they're like, buy, sell, buy. Okay. If you worked for a big trading firm and I work for a trading firm, they tell you everything to do. They literally give you sheets that say, this is what you do, monkey. This is what you do, monkey. Okay. That's why there is a monkey with headphones in the background, because monkey see, monkey do. That's what you do. Recipes in trading, the recipe is based on a pre-flight. We actually give you each one of the variables to be able to get into trades. For example, okay, trading's all about answering the what ifs. One might be a good stock or ETF candidate for you to sell premium. What's the correct options expiration cycle? How much capital do I commit to generating premium? What's the right strike options? What's the strike options to buy? Which ones do I sell? How can I limit my risk? Okay, TheoTrade has your answers. We build recipes with definitive criteria checklists for each strategy and each unique variable. So the checklist that you go through, the recipe that you go through, okay, gets you into a trade. Okay, but getting into the trade, that isn't even half the picture. Then what do you do when you're actually in the trade? Trades don't always go your direction, all right? When they don't go against you, or they do go against you, what if expiration is coming? What if there's a dividend payable? How about every variable and every nuance that you could imagine is covered in the criteria? TheoTrade is the answer to your questions. We'll give you the right probability for the trade. We'll give you how many option contracts do you trade for the account size? When do I close? Okay, the trade. I'll tell you that it's 50%, right? What if the stock sells off big? Do I bail out of the trade? What if you rally massively? Can I fix losing positions? Like, listen, trading is about how, it's about when, it's about why, it's about what price. But I'm telling you, this is just the beginning. It's just the beginning of the variables you're going to face while selling Ultima options for a living. Listen, you can go and you can read about what selling Ultima Premium is. Maybe even know how to build a few trades. I'm going to argue that any one of you, right this second, you can go Google selling options premium. Okay. 10,000 results will show up. I'm serious. 10,000 results will show up, about selling options premium. None of them give you specifics. None of them give you criteria. This is what TheoTrade is about. You need TheoTrade's recipe for success. 20 plus years trading experience. That's just me. There are 7 other full-time instructors here at TheoTrade, most of which hail from both the Thinkorswim, okay, TD Ameritrade, market making backgrounds, hedge fund backgrounds. We had access to client order flow. That's your order flow for the better part of 15 years. The buck stops here. We know what works, what doesn't. That's why I say I take a completely and utterly no holds bar approach. I don't care whether you see everything I do in my account. Hey, some days I'm going to be up, some days I'm going to be down. You need to see everything. You need to see the full Monty, not just what somebody wants you to see. Listen, I ran, education for 15 years at a firm that had the largest option order flow in the industry. And while there, studied millions of retail trader accounts. We know what works best, for retail traders. Criteria works best, and criteria is the recipe for your success. The following strategy, which is selling Ultima Premium for a living, this strategy and criteria requires the utmost attention to detail. We spent years on the strategy and years fine-tuning, this criteria. When you approach the section on criteria, you follow the steps to build a trade. We built a full-blown 5-hour course on Ultima, income generation. Before I even go any further, I'm going to tell you right now, here at TheoTrade, this is not the sale of another course. That is not what we do here. It's not my intention. I will explain to you what we do here at TheoTrade momentarily. First, allow me to simply say the Ultima Income Generator course. Yes, we have a course with a full structured curriculum. The structured curriculum includes, a slide deck with criteria. It's step-by-step recipe to be able to get in, out, and hedge, the trade. It's everything that you're going to need, to sell Ultima Options Premium. It's a 5-hour course. It's already archived. It's available immediately. You can start streaming it 24/7. We also give you access, to TheoTrade Mobile. TheoTrade Mobile can be accessed from like an iPad, or any mobile device. I say iPad, I shouldn't say iPad, any tablet, iOS or Android, we are compatible. The class slide deck that includes all of the entry and exit criteria, that checklist is available immediately right now for your download. Now, as I said a moment ago, it was poking fun earlier at $500 classes. You took a $500 class for this and a $500 class for this. I don't want you, to come to TheoTrade thinking this is another $500 class. As I said, that's not what we do here. TheoTrade has built an environment that gives you everything that you're going to need to invest, or in trade, all in one place and at one price. You can go through this 5-hour course, but that's not all we do here, right? We give you access to our entire library of classes since inception of TheoTrade. I left TD Ameritrade in 2015. We launched TheoTrade in 2016, okay? What have we been doing? Consistently building classes, curriculum, criteria, okay? We have 7 other full-time instructors I'll introduce to you in a moment, okay? You have access to everything we do. We also will provide you access, okay? Immediately access to all of those archives. We will give you immediate access to the portfolios. So what you're going to see in a moment, and again, we're not a class for $500. We will also send you out alerts, trade alerts, okay, for a variety of different portfolios, okay? What else do you need? We will give you email access to myself. If you are a client of TheoTrade, anytime you want, you can actually bounce different ideas off of us, okay? Again, we like to look at this business, okay, from the same perspective of you. You can't even call up TD Ameritrade anymore and get somebody on the phone, right? If you need help, that's what we're here for, all right? If you need trades, that is what we are here for, okay? If you need to understand something more specific about options or futures or technical analysis, that's what we're here for. And it is all encompassing here, okay, at TheoTrade. This happens to be the class right now. This is what you want to do in this marketplace. You want to learn to sell premium. You want to learn to mitigate risk. Now, I'm going to tell you right now, there are other classes here at TheoTrade that you can watch to your heart's content about technical analysis. There's other classes you can watch here at TheoTrade, even about day trading. But this is what you want to learn right here, right now. Now, I'm going to tell you a little bit about the class, and then I'll explain, okay, what TheoTrade is, okay, what we offer, okay, and obviously the cost for it. The Ultima Income Generator course curriculum. This is what you're going to learn in the 5-hour class. And again, you can start streaming it today. You're going to learn how to build a portfolio of high probability trades that generate consistent monthly returns, okay, regardless of starting capital. You're going to get all the detailed entry and exit criteria, the checklists, right? And that is actually designed to also keep your risk at a minimum. We're going to talk a little bit about option Greeks in this particular class. And the option Greeks will let you manage positions through one easy number. You're going to learn to use a risk array, which is probably my favorite section in this entire class, because the risk array lets you see, okay, not what your P&L is today, but it lets you see what your P&L is if we go up $5, down $5, up $10, down $10. Imagine you were playing in the game of chess and you can see 10 moves ahead of everybody else. You're going to be able to visualize your risk before the risk actually hits you. That's what learning the risk array. I'm going to tell you, it's the most instrumental portion of this class. It is something you can use throughout time in any portfolio. It's the same thing. By the way, when I say risk array, you know what a risk array really is? It's a stress test. You ever heard that phrase before? That's what the Fed does to the banks. You know why they do it? Because it works. Okay. You're going to learn how to properly allocate in a way that reduces risk and allows you to minimize risk in a portfolio. You're going to discover risk mitigation techniques designed to hedge even some of the most extreme market environments. You're not going to wake up and be caught off guard. You're not going to wake up in a panic. Okay, you're going to wake up and be like excited. You're like, we're down huge. What do you want to do when the market's down absolutely massively? Okay, when there's blood in the streets, sell premium. Okay, when people are freaking out, sell premium. All right, how can you function through that kind of volatility? Because you've got a risk mitigation tactic on. You're going to learn how to sell premium also in small accounts, in a retirement account with innovative new trading vehicles that have never been available before. That is just, okay, that is just the Ultima course. Now, we have a brand new class, and it's one of the reasons I'm actually hosting this particular webcast today. New class is live March 1st. It's a 3-hour class. It's inflection point spreads. The new class is the Ultima genre of trade. What I've actually done with this brand new class, okay, is we're actually going to take Ultima and have a very small twist. And the reason we're twisting Ultima very slightly, okay, is there's even a better way to reduce risk on the fly, meaning that Markets are so volatile right now that we needed to introduce a way to hedge risk in the midst of a marketplace collapsing. So think about that, because right now is a perfect time to discuss it because the S&Ps are getting killed. So the market's collapsing around you. Okay. There is a 3-hour course that we're going to be teaching. I am doing the class live from right here. Welcome to ice cold. There's a blizzard outside, Payson, Arizona. Yes, it snows in Arizona. We've gotten probably a half a foot since we started this. It's a 3-hour course. It's going to be archived immediately following the presentation. It will also have a class slide deck. This is in the Ultima Premium genre of trade. Okay, it is the newest class here at TheoTrade unequivocally. It's coming out March 1st, still cleaning up the PowerPoints. Okay, if you cannot make it live, and I urge you, make it live, get there. Also, there's a couple of like prerequisites you want to watch. You want to watch the original Ultima class before you actually come to inflection point spreads, right? Inflection point spreads class, this is what it's going to teach. You're going to learn to sell premium and hedge risk in one transaction, meaning that you're not going to have to use a VIX volatility spread and then sell premium here. You're going to get it all on at one time. You're going to create high probability positions that generate monthly returns, discover how to hedge existing positions, even the most extreme environments. There's going to be detailed criteria for inflection point spreads and keeping risk at a minimum. You're going to learn to analyze the inflection point spread, so you're never going to be caught off guard. And you're going to find how many inflection point spreads can you safely allocate for your particular account size. Okay. Again, this is a class. It is coming live March 1st. I'd write it down 9 a.m. to 12 p.m. Central Time. I host the classes during the trading session because it's dynamic, right? TheoTrade is also a completely riskless trade. There's a 90-day money-back guarantee. One of the things you have to understand, what we do here at TheoTrade is not a membership. You come here, you just pay for 90 days. Why 90 days? Why not a month to month? Because we send trades out to you. We execute trades, and you're going to need a little bit more time. Some of the trades are going to last 20, 30 days. Some of the trades are going to be on, for upwards of 6 weeks. But if you want to start to build an inventory, we suggest it's 3 months. Make the 3-month commitment. At any point in the next 3 months, if you're not comfortable, you're out. It's fine. You got to watch all the classes. You're going to get to see the live inflection point spread class. Like, there's nothing I can do about that. Everything that we do here at TheoTrade is all encompassing, meaning that we don't say that you get access to this or access to this, and you got to pay more for this, and you got to pay more for this. We don't do that. It's one charge. That's it. We're not a membership. If you want to do this again after 3 months, pay then. That's fine. It's a money back guarantee. There's absolutely no stipulations. And you know what? We used to do stipulations. Listen, there's no excuses, no questions, no commentary needed. It's a few $100. We don't care. We want people, that want to learn this business. And I am emphatic about that. Like, if you're listening to this, we want people. We have over 6,000 clientele. We want people coming here, that want to be part of this. We want people coming here that really want to learn this business, specifically that want to learn to sell premium. There's no excuses on the money back guarantee. You don't have to call us on the phone. Please don't call us. Support at theotrade.com. At any point in the next 90 days, you get a full refund. There's no if, and, or but about that. As I said, there's no stipulations. You can go to theotrade.com/SKU. It's S as in Sam, K as in kick, E as in echo, W. It's theotrade.com/SKU, and you can enroll for it now. And by the way, I just want to bring you into this because I think it's also critically important. You can come in here and literally, this is theotrade.com/SKU. I'll throw the page up here and I'll explain everything that comes with TheoTrade. Theotrade.com/SKU. As you go through here, click add to cart. There's one aspect I want to bring to your attention. Put your phone number in. It automatically enrolls you for text messaging. If you are out of the country, you can actually use what's termed push notifications. Also, you can set up 1 payment, 2 payments, 3 payments. It's 3 months, period. We don't care how you pay. That's up to you. But please put your phone number in there. Again, it's going to give you access to everything that we do here at TheoTrade. Again, it's theotrade.com/SKU. You can enroll for it But now I'm actually going to discuss what some of the bonuses are. When I say a bonus, listen, as I said, Theo trade is vastly, vastly different. One of the things I got to do when I worked with TD Ameritrade and Thinkorswim. So I ran education for Thinkorswim and TD Ameritrade. And in doing so, I got to see all the other education companies out there. And the thing that always killed me about the education companies is they sell you a course, right? And when they sell you a course, and I think everybody's been through this, a lot of you have, they sell you a course for $500. And then you have to buy an indicator for $500 that goes with the course. And then before you know it, you have to take a class probably to learn how to use the indicator, but all of that is obsolete. Now you got to buy another class for $500. Okay. Buy another indicator for $500. The cycle never stops. Okay. I'm going to tell you right now. And I think anybody that's been through Theo trade, I mean, really, okay. Yes, you get all the ultimate trades with this. Absolutely. By the way, I see some of the questions coming in and I'm going to respond to all of them. Okay. I think anybody that's been to education, okay, or been to Theo trade will know everything we do here at Theo trade is all encompassing. All right. And I'm going to explain exactly what that means, because what we do here, we go beyond a class or an indicator. Okay. We get that people want everything to be able to trade. They want everything to be able to invest. They want it at one place and one price. And we're constantly developing new classes. I mean, there's 8 of us that are full-time in development of new class and new curriculum. Here's the first bonus that we give you. It's a quick start beginner's guide. Right? This is if you've never traded before, you never put on a trade before. We recognize that we got to get you ramped up. Okay. What does this look like? It's our start here menu. When I say start here, like legitimately, this is where you start. Start here menu. What does it do? Options 101, options 201, options 301. Okay. Then we actually get a little bit more in detail. All right. Preparing for your trading day, order execution, part 1, 2, and 3. I'll make a quick argument. You'd be the most experienced trader in here. You need that 3-part class. Okay. Most people, they might know a lot about trading. They know nothing about order execution. Order execution is actually an art, the art of actually sending trades, understanding where the trade goes, how it actually routes to Citadel or Virtue or hits the trading floor. Okay. Every single nuance of that, I helped build the order routing system at Thinkorswim. Similar order routing system at Tastyworks, at E-Trade, at Robinhood. They all built off that exact same logic. It's all covered, all right? And this is just the start here menu. Get access to all of this, like from day one, all right? So that's the quick start beginner's guide, because I want you guys to know we'll get you ramped up from absolute novice into the extreme. Now that's not for everybody. Some of you have experience. Well, if you have experience, here's bonus number 2. You will get access to every single class since we launched Theo Trade in 2016. There are over 100 classes, right? Obviously, you get Ultima Income Generator and you get the Ultimate Trades, but you get in-out spreads, Guide to Surviving and Thriving in Extreme Volatility, back spreads class, the next big short, a risk twist class. You get Guide to Selling High Probability Spreads, day trading NASDAQ futures. Listen, rather than me just rattle off a couple of names, I want you to see what you really get here in Theo Trade. And to do that, okay, this is the Theo Trade archive. Classes are broken into option strategies, technical analysis, futures and bonds, stock classes, day trading classes, hedging, trend trading, pairs classes. We even have mindset. We have an in-house psychologist. Options, I'm the options geek here. I'm your resident options geek. Here it is. Income Accelerator, Ultima Income. Like, how does the Ultima class work? Just come in here and click on it. That's it. You just come right in here, you click on it. Okay. The class is broken into 3 parts. Oh, it's my favorite. Okay. Your capital, the atomic bomb. All right. Work your orders, people. All you have to do, and you can see this class is quickly. I'll turn the camera on and off throughout the. Yeah, there you go. So the class is actually playing live. You click here to download the slide deck. There's even a quick start guide. So everything is there in there. All right. You won't even believe how many classes are in here. You get access to all of them from day one. All right. Bonus number 3, you get access to our live trading chat room. So what does that look like? And again, this is Theo Trade. This is live Theo Trade. Okay. When I say live, we are broadcasting now 6.5 hours per day. What you're seeing here, this is a day trader. This is Tony Rago. He trades NASDAQ futures. Okay. And I have him on mute, but you can actually
And
see
we just need to do a lower low here and we'll get paid.
he is executing live right now. We don't do any paper
This
trading.
is your kind of tape, is it
Okay.
not, Jay?
Look at this.
You're primarily a shorter, right?
Okay. So you're actually seeing Tony, all right, live right now. And if you scroll down, he will actually give you setups in here. So he's the highlighted, he's giving you setups throughout the course of the day. So execution, everything is in here and is done live. So we're giving you access to this for 3 months. And again, we do stuff in 3-month increments. So we give you live trading chat room and we broadcast throughout the course of the day. And I know that not everybody can do that. Not everybody can sit there all day long. It's okay. You don't have to. We still text out trades, but I want you guys to know that if you do have the time and you want to spend the time with us, we broadcast all throughout the course of the day. Everybody was asked, am I accessible? I am on for a minimum of 1 hour a day in our chat room, minimum of an hour a day. And I sit here and I answer emails. Okay. And I think it's important. We also do daily coaching sessions. We give you access to 5 different portfolios. We do text and push notification on trade ideas. And something that I put huge weight into. Okay. So long as you're a client, we will access and answer your emails. All right. Your emails can be direct trade related questions. You don't have to come in here and like tiptoe around it. My friend's dog's roommate's grandfather has a trade on. Forget all that. Listen, copy and paste the trade into an email. Ask me, am I doing this right? Okay. If I can save you even a few times throughout the course, okay, of your livelihood at TheoTrade, think about that. What is that worth? I mean, what's it worth to you? Right? I've had people that have gone through $50,000 plus in trading education. What we do here at TheoTrade, they'll tell you, okay, everything pales in comparison to what we have going on here. And you'll understand here in a moment why. TheoTrade, again, this gives you access to all the classes, the chat room, 5 trading portfolios. You can email us, right? The instructors, Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve Miller, Tony Rago, Blake Young. Jeff Bierman is also a professor of finance at DePaul University. He also moonlights us with here at TheoTrade. He was also the chief market technician for TD Ameritrade, built most of Thinkorswim charts. Matt Williamson, market neutral premium selling strategist like myself. Corey Rosenblum, he's our resident swing trader. He's also a CMT. Brandon Chapman. Brandon worked with us at Thinkorswim and TD Ameritrade as well. He actually wrote most of the course curriculums and the manuals that are still used to this day at TD Ameritrade in terms of education. Steve Slim Miller. Slim is our resident psychologist, stock options and futures trader, 43-year veteran of the trading floor, and became a screen trader in the early 90s. Tony Rago, NASDAQ futures intraday strategist. That's who was just live. Last but definitely not least, Blake Young, market profile, futures and currencies, is also a commodities trader, former hedge fund manager. Blake also kind of comes from the Thinkorswim and TD Ameritrade world. Here's pretty much the entire crew, predominantly working from home. Access to 59 proprietary indicators and scans. Anything that we build, we provide to you from day one. Anything that we build, we give to you access. S&P gravity points, expected move. By the way, the expected move indicator, I will give you access to that here momentarily. Next generation squeeze indicator, okay? IV rank, unusual put options activity. All I'm saying here is every indicator that we use, right? And I use a couple of them in here. If I cruise over to charts, I'm not a big market technician, but I do use stuff like Quantix, give you access to this. You get to download it. As soon as you enroll for it, download it. There's nothing I can do. Like, people go, what if I get a money back guarantee? You're going to take the indicators away? We can't take an indicator away once we've given it to you. That's just the way it works. Whatever. Like, we get it. Like, we get it, right? It's all encompassed. Bonus number 4. Here's the Theo Theta. This is the Ultima portfolio. This is the positive theta portfolio that I showed you the results for the entire year. No holds, okay? No holds barred trading approach. When I say no holds barred, this is it. This is the Theo Theta portfolio, okay? Each and every one of you could be generating $220 a day just following this. Obviously, you could amplify this. I keep the portfolio, okay, to a relative size, a relative comfortability, right? You can reproduce every position I have in my account. You could be up $5,600 today, right? But with that is going to come some risk. So full disclosure on all trades, opening and closing hedging positions. You get to watch me like we've never done before. And by the way, at first I was so hesitant to doing this. I love it now. I love it because it keeps me, okay, on the straight and narrow in every single position that I do. Because if I don't, I have 6,000 plus people that'll call me out on it every single time. Okay. It's been the best trading of my career with a no holds barred approach. I'm serious. It's completely like liberating, if you will, to just show everybody like, screw it. There's my account. For better, for worse, that's it. And I will show you every account in here. This is also an IRA, and I can kind of put them together. You can see all P&L on a day-to-day basis, right? You can see my Tastyworks account, all P&L on a day-to-day basis. Every little nuance is available for you. And I think, again, it's, as I said, it's kind of liberating. I like doing it. All right. This is what the portfolio looks like. It couldn't be easier and cleaner. All you do is like, you can actually copy and paste these trades directly into your trading application. Couldn't be any cleaner than just showing you a spreadsheet. We also do a weekly video. I know that like people like, I missed the text message, I missed this, I missed that. None of this is about timing. Okay. Watch a video. The video is 12 minutes. It's always shot on a Friday morning. On a Friday afternoon, you can watch the video, and in 12 minutes, we update you on everything that's done in the Theo Theta Ultima portfolio. Every nuance, every trade differential on the Theo Theta and the Theo Theta Small portfolio. When I say Theo Theta and Theo Theta Small, one incredible like difference, we started a Theo Theta Small portfolio because some people are like, hey man, I got $2,000 in my account. That's fine. You can have $2,000 in your account. So the videos will update you. Bonus number 5, technical analysis toolkit. For those of you that want more, that want to learn about technicals, we have that. Okay. Tech 101, Tech 201, MACD indicators, timing-based systems. There's 21 other technical analysis classes here. Bonus 6, the day trading treasure chest. This is actually specifically for those of you that want to sit and trade throughout the course of the day. It's all part of TheoTrade. Intraday trading NASDAQ futures, day trading ES blueprint. Okay. Consistent intraday strategies and setups. There's 11 other day trading classes. Bonus 7. This one, I'm going to pause for a second and say timeout. I'd write this down. The 5 essential building blocks to successful trading with 43-year veteran Slim Miller. It's probably a class that I'll even tell you, it's probably the most influential class that I have watched myself, okay, anytime in the last 20 years. I mean, the class is phenomenal. We could easily charge $1,000 just for that class. People would take it all day long. It's incorporated here, and I think a lot of people miss it, but I put a lot of emphasis into it. And I say write it down. And I say write it down simply because you forget about it. Don't forget about it. It's the 5 essential building blocks to successful trading. Slim Miller has forgotten more about risk management than many of us will ever know, right? Seriously, I love this particular class. Bonus 8, it's a quick start guide to Ultima trades. Kind of like you get a quick start guide to like a lot of the technology you might buy. We built a quick start guide, like a PDF file, specifically for Ultima trades. That's bonus number 8. Look what our members are saying. Okay. Thank you for the prize. Very much appreciated. TheoTrade is the first educational trading service that I'm actually making a profit with. Okay. And one which I can see a pathway to retirement. It's a little bit more of a recent email, and I just wanted to throw that out to you. Listen, TheoTrade includes everything you're going to need to invest and everything you're going to need to trade. It's classes, it's coaching, it's email access to the instructors. We give you a live trading room and live trades, instructors, and give you the scans, any indicators they use. We also have mobile access. We have our own TheoTrade mobile. It works on Android, it works on iOS. TheoTrade mobile is found in either one of the app stores, and it gives you, again, access 24/7. It's everything you're going to need to succeed. We've literally built the Netflix for traders. It's $297 for 3 months. So everybody knows that is not an introductory price. I just want to throw this out here because it's going to come up 100 times in questions over here. We don't do memberships anymore. We charge $297. It's for 3 months. After 3 months, if you want to do it again, we'll ask you. We do not auto renew. We do not auto bill you. It's $297, $300 for 3 months. And it has a money back guarantee on it. It includes everything we just talked about. And of course, please, okay, get enrolled and watch the Ultima class, because the inflection point spread class is coming, and it's coming, okay, basically a week from now. It's on Tuesday, March 1st. If you cannot make it live, we archive everything. Go to theotrade.com. Again, theotrade.com/SKU, theotrade.com/SKU. I want to reiterate, it's $297 for 3 months. It's not an introductory price. After 3 months, it's $297. What's it going to be a year from now? If you enroll now, okay, it'll be $297. We're fighting inflation, okay, tooth and nail over here. I'll reiterate, TheoTrade is a riskless trade. There's a 90-day money back guarantee. For the first 3 months, it's a full money back guarantee. Why do we do it? It's $300. Okay, it's a money back guarantee. If you're not satisfied for any reason, in the next 90 days, just email support@theotrade.com, full refund. There's no stipulations, there's no excuses, no questions, no commentary needed. By the way, if you receive a refund, you get to keep bonus number 1 on us, and you get to view the inflection point spread class live. There's nothing we can do about that. If you want to watch the class live and then you go, I canceled, like really, it's kind of goofy to think about it. It's only $300. I think if you emailed us once or twice, you're going to find out $300 is pretty reasonable, given the fact we have over 6,000 members and we respond to people individually. Like, that's what our business is kind of based on, right? We have incredibly good relationships also with most brokerage firms out there. So if you have any trouble with your broker, they don't let you do this, that, okay? We have great relationships with those brokerage firms. We can actually walk you through that process and actually help you with some of the brokerage firms out there. One aspect here on the 90-day money back guarantee, okay? This is specifically to incentivize you to enroll today. The first 30 people, the first 30 individuals that are here today to enroll for this, okay, receive the 90-day money back guarantee. Now realize, okay, we give you unlimited email mentoring. That takes a lot of time in the saddle, okay? And there's only so many people, like, we're comfortable onboarding a few hundred people, okay, a month. That's it, okay? And we do stress there are 30 spots available on this riskless deal. Send us your trades. You can bounce trade ideas off of us. The $297 riskless offer, it's never been available before in this kind of context, right? We're giving you the ultimate income generator, okay? Plus, you're going to get to see a brand new class, the inflection point spreads, which is an Ultima income generator, okay, class. It's in that genre of premium selling. In addition, we're going to give you a no stipulations money back guarantee, and we're letting you see the entire portfolio. I mean, it's everything. So get to TheoTrade now. I'll pop back over here in just a second, but close my year-to-date profit from Ultima Trades is paid for my yearly TheoTrade subscription. I stress to you guys, it's theotrade.com/SKU. S is in Sam, K is in Kick, E is in Echo, W. If you pop over to that site right now, okay, just come over here. Again, 30 riskless spots left. I will read off names as you guys are enrolling. I'm also going to answer your specific questions here. When you click add to cart, as I reiterated, and I'll do it again, just put the phone number in there. It automatically enrolls you for text messaging. Otherwise, we kind of have to enroll you a little bit more manually for text messaging. Okay. Payment information. You can do a single payment of $297. It's fine. You can do 2 payments of $149, 3 payments of $100. Again, we don't care. We just give you options in here. I just figured I'd go through that, but that's the enrollment form. Again, it's theotrade.com/SKU. Right, onward and upward from here. Everything you get today, Ultimate Income Generator, Quick Start Guide. You get access to 100 different trading classes. You get access to our chat room, email access to the instructors, the Theo Theta Live portfolio. Of course, you get the technical analysis toolkit, the day trading treasure chest, the mindset mastery. That one's huge. The bonus number 7, seriously, 5 essential building blocks, okay, to successful trading. It's Slim Miller's class. I don't often like push somebody else's class. That one's huge. It's phenomenal. Again, 20 years, it was game changing to listen to what he has actually done. And of course, bonus number 8, the quick start guide to Ultima trades. Okay, this just a quick chat here from Jeremiah. My first 4 trades following exactly the details in your Ultima class just closed out using GTC orders set right after getting into the trade. This paid for your class in less than a week. I'm very thankful I subscribe to your services. Keep up the good work. Thanks, Jeremiah. Again, if you go to theotrade.com/SKU, okay, you can follow me to that link for the auto expected move indicator. I will reiterate that. We have an auto expected move indicator on here. So let's pop over here, okay? The auto expected move indicator, for those of you, okay, it is located right towards the bottom of this page, right? I want to reiterate once again, if you're enrolling, you need not download that indicator. That indicator is on the TheoTrade site. So you're fine. You don't have to download it. We give you everything you're going to need. I mean, everything you're going to need, bar none, in this business. And again, I reiterate, it's completely riskless in here. So if you sign up for 3 months and you're like, oh, maybe I just wanted to do a month, you can get your money back at any point in time. That's fine. We're really comfortable with that. Hope you guys are too. Again, it's theotrade.com/SKU. Let's get a couple of your questions answered in here. This one comes from Jeff. Wanted to drop you a quick email. I think the class is wonderful. I've been stretched each session, but not beyond my capability. After each session, I watch the recording, do the homework, feel each week that my knowledge of options trading is growing steadily and rapidly. Obviously can't speak for my classmates, but it's going very well for me. Thanks for the great instruction. Here's one from Todd Summerall. It just indicates that for the most part, you can ask me specific trade related questions. Okay. Don't remember, by the way, this is fairly recent. Don't know if you remember, okay, but I emailed you a few weeks ago and told you that my delta was positive a couple thou or more. You told me to smash it or was going to be in trouble. I smashed it. You saved my account. I just want to thank you for your information. Before Theo, I had no clue about portfolio delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want. And I am. It's from Todd Summerall. The reason I'm using that one, this gentleman, his entire retirement would have been gone, annihilated by 50%. We send him an email and was like, listen, man, your risk is way out of control for the account size. You close now or you will suffer a 50% decline of your retirement. He smashed all his positions, meaning closed the positions, and he's alive to tell the story today specifically because of it. Let me answer some general questions, and I'm going to get into specific questions. By the way, those of you, as you are enrolling, again, as you are enrolling here, okay, I will read off your first name and first initial, just, okay, to satisfy the fact that you were in the first 30 individuals, okay, that enrolled, which makes it, again, a completely riskless trade. In fact, we have the first batch of names that I think is coming through here momentarily. Oh, I apologize. I'm going to get the questions. Yeah, actually, it takes me about 5 to 7 minutes to see your name come through here, but I'll read a couple and then I'll go through some of the questions. Rich J from California. All right. J.H. from Kansas, Christopher A. from Washington, William H. from Montana, David D. from Oklahoma, John F. from California, Steve P. from Florida, John T. from Arkansas. Give me, again, about another 3-4 minutes and I'll read off another batch of names because I can see people enrolling for it, but I don't see it come through for about 5 minutes or so. So a couple of general questions and then we're going to get to the specifics. What do you need to get started? You need a laptop, internet connection. That's it. Okay. In fact, you don't even need a laptop. I use my iPad a huge amount. By the way, people always ask me, do I have to buy the good iPad? That's a $300 Walmart iPad, people. And after about a year to 18 months, I just hand it to one of my children. I have little ones. I hand it to the children and I go get me another $299 iPad because I don't need the iPad Pro. Okay, it's a Pro. It has a bigger camera. It has 3 cameras. Do I really need that on my iPad? Absolutely not. Okay, but I'm amused by it. We have everything you're going to need, okay, to get started here from absolute novice, okay, to some of the most extreme traders. And I stress that, all right? Number 2, this is not a membership. We don't do that. This is not like a gym membership that you can't get out of, like, give me blood to get out of the gym membership. I hate that, okay? And it's from my own personal experiences and some of the experiences of a few of the instructors here at TheoTrade. We don't like tying people in. And I stress this to you. We want people that want to be here. And there's over 6,000 people that are now active at TheoTrade. I don't even think I showed this. When I say active, okay, this is a chat room. You get to talk to all of us, okay? Anyway, you could just take a look. This is, clients. Some of them are in here working during the day. Some of them are in here just having fun. It's a trading community. Be part of it. There, any given day, there's over now 3,000 people a day in that chat room, which is, if you compare it, there's no other room that substantiates, in a membership like atmosphere of that size. Okay. Number three, we're now providing Theo Theta weekly video updates. So you can kind of go into the updates. All the moves that I've made in the portfolio, you can update in 12 minutes. Okay, that's important to me. Number four, we archive everything. Every single word spoken here at TheoTrade is archived. We understand that you can't watch every single trading session. We also have the capability to speed the archives up. We provide you access to TheoTrade Mobile. On TheoTrade Mobile, you can download the archive. Okay, as you download the archive, you can then play the archive back at 1.5 times speed, 3 times the speed. I sound like a chipmunk. It's awesome. Okay, but those archives are available. Number 6, add your cell phone number when enrolling. It enrolls you for text messaging in there. Number 7, you can email us anytime. Okay, anytime you can email us, you'll receive a response. Okay, receive a response within 24 hours, including trade-related questions. In fact, I stress that. Include trade-related questions. Most of us here at TheoTrade, we come from a market-making background. Okay, we come from a background of brokerage services. I've actually held a series 3, which has to do with futures. It's my futures principle. A series 4, which is an option principle. I had a series 7, which of course is a registered broker dealer. I had a series 24, which is a principal broker dealer. I've had my series 66, which is a 63 and a 65 combined, which is a registered investment advisor. I managed over $400 million early on in my trading career. Fun stuff, right? Okay, we know how to answer trade-related questions. That's the point. Number 8, you're going to gain access to every course. Okay, every course that we've done in the previous 5 years of TheoTrade, so 6 years, classes, coaching, archives. All of our archives are searchable. Name a trading topic, and we have an archive on it. Number 9, variations of all the trades that are available. You can do inside of a retirement account. Okay, you can also do this in a margin account with as little as $2,000. 10, we at TheoTrade can help you get approved for options at several major broker dealers. One thing I stress to you guys, okay? If you have trouble with your broker dealer, because a lot of people go, Charles Schwab won't let me do this. E-Trade doesn't let me do that. We have got you covered on this particular front. We will work with those brokerage firms and other brokerage firms that will help you get approved to trade the strategies that you are comfortable with. All right. Number 11 here, remember 30 riskless trade spots available. So I'm going to read off a bunch more names here momentarily. Listen, get results, take action, enroll for TheoTrade now. There's no risk. There's no risk in doing it. All right, let me actually answer some of your specific questions in here. I want to reiterate, okay, and I'll pop this up over here. It's theotrade.com/SKU. Okay, as I said, I'm going to answer some of your specific questions. I'm also going to read off a few more names here momentarily. All right. Okay. I like this one. The first one I'm going to read off is probably one of the more challenging questions, but let me read off a few more names. Donato P. from Illinois, Kerry R. from Pennsylvania, Stephan S. from Massachusetts, Robert B. from Virginia, okay? Fernandro C. from Ontario. By the way, if you're from Canada, you can shoot us an email. There's a couple of brokerage options we have that we deal with in Canada as well. So let me get to a couple of the questions that are in here, okay? Do I need a different brokerage firm to execute these trades if I'm approved for level 1 at Charles Schwab? The answer is, yeah, most likely Charles Schwab probably will not allow you to do very much. Charles Schwab is an extraordinarily conservative firm. Obviously, Charles Schwab now owns TD Ameritrade, but there are a number of different brokerage firms that we can direct you towards if Charles Schwab won't allow you to execute these trades. Again, there are new rules that have actually come into play. The new rules in the industry, okay, have not been absorbed at most of the major brokerage firms, which is a huge disadvantage, in my opinion, to be with those brokerage firms. Okay. Somebody said, is the theta value reflected on Tastyworks? Trade show your strike, okay, and the amount. Yeah, Al, it absolutely does. Actually, if you look at Tastyworks, it's got your cumulative. That's your cumulative theta right there, and this is a theta per strike, right? So it's actually got both. You can see the aggregate theta, and you can see theta per individual strike in the trade. So Al, hope that helps you out over there. And by the way, there's a couple of different ways to tweak up Tasty as well. Okay. Don't you need dollars in your account to cover the potential? All right. And the answer is nope. So you do not need the capital in your account to be able to trade. Like if you were assigned an option. By the way, what we teach here will not allow assignment. Nevertheless, we'll actually teach you to reduce risk even if you were assigned. You do not need the capital in your account. Unequivocally, you don't need the capital in your account. Listen, in some cases, I'm trading spiders, right? And I may be trading 5 or 10 of these contracts in here. And when I'm trading 5 or 10, that's a 5 lot in spiders. Okay. I wouldn't even have enough money in the account to cover a 5 lot if that were assigned, but you don't need that. It's also, it is a extraordinarily, okay, minuscule amount of risk on that. Okay. So somebody said, can I circumnavigate the day trading margin rule, the pattern day trading rule, by putting $2,000 in my account? The answer is you can put $2,000 in your account, but you won't be able to do it at the brokerage firm that you suggest. Okay. We can actually walk you through how to circumnavigate the pattern day trader rule. So there's a couple of different ways to circumnavigate it, and it's not exactly what you think, but yeah, so the PDT rule is something that's very easily circumnavigated. You do have to have the right brokerage firm to do so. If you sell way out of the money, who is buying? Market makers are always willing to make a fair and two-sided marketplace. Anything that you want to sell, the market making firm will take the other side of that trade unequivocally. Okay, that's what they do. And you go, well, why would they ever want to buy a way out of the money option? It's part of their inventory, and they'll turn around and actually offload the risk in the SPX. Okay, so there's always someone on the other side of your trade. You know, that's why being a market maker ain't all it's cracked up to be. And I know there's a lot of market makers that go, I was a market maker, and they tout that you have to go to their classes. I'm going to tell you from my own experience, I made markets, and I made markets early in my career, and I grew up around the market making side of the business. That does not help you in this retail world. It doesn't help you at all, because what we did in the market making business was so far away from what we do in the retail business. Two totally different worlds. And if you ever hear from a market maker, I'm a market maker and I learned how to do this, okay, you gotta forget about that. I'm going to answer a couple more questions in here. All right, onward and upward from there. So next question that came up over there. I have $2,500 to start. What's realistic return? So realistic return, okay, is going to be based on, are you willing to risk most of the $2,500, right? Listen, you're going to actually churn it out, and it's going to be a slow start. I don't want to, give you the illusion that with $2,500, you're going to double your money like overnight. But if you're willing to put a lot of the $2,500 at risk, okay, your returns are actually going to be considerable versus somebody, for instance, if somebody starts with $1 million, okay, their returns are actually going to be much smaller versus a $2,500 account where you're willing to basically put some of that on the line. And that's, I know I can get into specifics, but I got to have a little understanding of your risk tolerance. Okay. The one thing I want to point out is if you say, I have $2,500, what am I going to make? I don't know. You have $2,500 though. How much of the capital do you want to get working at any one point in time? And that's the critical component, because somebody says I have $1 million. I'm willing to work the whole $1 million. I'm like, it's big boy returns there. It's really big boy returns. I'm working right now $1.2 million. Okay. In capital, and one of the accounts was up like 80 grand. If I accumulated the other accounts, I mean, I'm up, upwards of close to about 19% a year-to-date basis throughout spread throughout the accounts. It's over $1 million in there. By the way, Side B from Texas, James D from Indiana, Mark B from Florida, David M from Colorado. Again, just reading off a couple of names as they come up here. Answer a few more. Okay. Oh, I like this. By the way, this is actually a comment more than a question. I appreciate who TheoTrade is. Thank you for thinking of your traders, not just selling something. All encompassing is refreshing. So no, thank you. I mean, listen, I got to see the whole education side of this business from a really different seat. I mean, we built education at TD Ameritrade and Thinkorswim. The one thing we couldn't do from inside the brokerage firm, we couldn't give you criteria in the brokerage firm. We couldn't do it because we were under FINRA and SEC guidelines. And FINRA and the SEC said, you can tell somebody what selling options premium is, but you can't tell them the criteria behind it. You can't lead them to that. And I was like, man, I could not wait to get out of the brokerage business and out from under the regulators. By the way, I loved what we did. I think Thinkorswim and TD Ameritrade. I did. I love my time there. I would never, exchange that for anything because you learn so much. But at the exact same time, you're under the thumb of regulators. They don't let you do anything. Like you can listen to all the different brokerage education out there. It's all worth nothing because if it's worth something, then FINRA and the SEC would shut them right down. Okay, it's a problem. It's a big problem in there. Oh yeah, Neil said, how can I sell SPY calls at TOS in my IRA account? It says illegal. Okay, can I do Ultima with spreads? You don't have to. We will actually walk you through that in the class. We'll actually walk you through specifically when somebody says, I can't sell naked SPY calls in my IRA, it's illegal. Don't sell naked calls in the IRA. It is. Okay, TD Ameritrade has not updated their rules yet for the IRA. Okay, and again, other firms are willing to do just that. Okay. Oh, it's because I will use this for my retirement account. About how many Ultima inflection trades, alerts. Okay, so how many are you going to get? Right now, I'm only actually running in the. It depends on which portfolio you're going to use. I just want you guys to understand this. But depending on the portfolio, there's only a handful of trades right now in the Theo Theta small portfolio. The Theo Theta small portfolio obviously has a smaller number of trades. Okay. You can also, with your IRA, though, follow the main Theo Theta portfolio. And the main Theo Theta portfolio, it's definitely going to amplify returns and trades. Okay. Neither is going to be all that intensive. You may get a handful like yesterday. Yesterday, I sent out 2 different text messages for the Theo Theta small portfolio. That's it. Just 2 text messages. Those trades are just going to sit there for a little while. Okay, just a little while in here. And by the way, I like what's going on in markets right now. It's getting crazy out there. So only a question, 2 more, and then we're going to wrap this up. Oh, how far out of the money do you typically start the spread? So it depends how far out of the money specifically. Okay, first of all, I'm not using a spread. I am actually using the sale of naked options, and then using a different number of spreads to actually mitigate risk. But it's actually based on probability. So it's how far out of the money. It varies depending upon volatility. So if I said I went, 10% out of the money, I'd be lying to you because the higher the volatility, the further out of the money we can go. It's actually a sliding scale. And we'll actually show you in the class the correct delta, right, to actually sell in each and every position. There's actually a delta parameter that we use in each and every position. Okay. I did try to get to almost every single one of the questions in here. Okay. Kevin K from Tennessee. That's the last name I just saw come up in here. I want to thank each and every one of you for attending today. I hope you guys can make the class live. Again, that class live is coming next Tuesday. It's Inflection Point Spreads, the IPS class live Tuesday, March 1st, 10 a.m. Eastern time. If you can't make it live, that class will be archived immediately. Go to theotrade.com/SKU to enroll for the classes. Of course, you can hit us anytime, support at theotrade.com. We'll answer your questions on a one-to-one basis. Thanks everybody for joining us today. Have a wonderful afternoon. Bye-bye.